A group of women are gathered around a conference table with laptops and notebooks. Figure 11. One using the advanced tools in Excel can help businesses evaluate the effectiveness of their social media marketing efforts. Credit. Modification of Group of Women Gathered Inside Conference Room by Christina Morillo/Pexels, CC0. Chapter Outline. 11. 1. Understanding data, data validation, and data tables. 11. Use statistical functions. 11.3. What-if analysis. 11.4. Pivot tables charts. 11.5. Data analysis charts. As with many corporations, at WorldCorp there is a need to share information internally across various business functions, such as marketing, accounting, and operations. This could include information about current customers and their purchasing patterns or price changes in shipping cost over the last 5 years. This type of information can then be used by each department to evaluate their performance or to identify opportunities. The data used by each group might vary, and the analysis will also differ based on the needs of the department. The information gathered internally might also be shared with external stakeholders in the business, such as customers or investors. Data shared with external entities could include shipping volume per customer or overall profit calculations for key investors in the business. Microsoft Excel can facilitate data analysis at various levels within WorldCorp and for external audiences. It is a useful tool for assisting management with decision-making and to understand the business at a higher level. Excel's advanced tools facilitate the management, interpretation, and presentation of data critical to managing a business or an organization. Learning objectives. By the end of this section, you will be able to describe the different types of data, define data validation, and describe the different techniques for validating data. Construct a data table for a dataset. Data can come in a variety of forms. It can fit into specific categories, or it can be more general in nature. We can collect data in different ways, such as through instruments like a thermometer or through an open-ended survey. Regardless of the type of data and how it is collected, the information is useless without analysis. Data analysis is a powerful tool that can guide key strategic decisions. Businesses rarely make important decisions without some data analysis to support them. A key step in the analysis process is ensuring the reliability and validity of data. A business can then use various techniques to understand the information better. Microsoft Excel provides several tools to make that process a bit easier for the business decision maker. Business analytics is one career field that uses extensive Excel skills. This field focuses on careful analysis of data to provide insights and recommendations to the management team on ways to monitor and improve performance. The soft skills needed in this field include critical thinking, analytical thinking, problem solving, attention to detail, and communication. The business analyst must dig deeper into data by asking the why questions and then be able to clearly communicate their findings to colleagues who may not know the terminology and techniques. The vast amount of data in today's business world creates a high demand for these positions. Over the next decade, the number of jobs in the field is expected to grow over 10%, with the positions commanding salaries over $80,000 per year. Even if you choose to take a different path in your career, learning these skills can greatly increase your value to an organization. What is data? To analyze data, let's examine the various forms that data can take and how to collect and organize it. In essence, data consists of facts or information that can be used for reference, performance monitoring, and/or analysis. For example, data can be collected about online purchasing habits to monitor the market share performance of select brands. A business can then analyze the data to reveal trends such as the purchasing habits of certain demographic groups. Businesses use many methods to collect data. One common approach is using surveys, which can collect a wide variety of information. Also, with today's technology, surveys can often reach a large audience by using email or social media distribution. Businesses also often have a lot of data stored in both internal and external databases. Internal databases consist of information a company has collected itself, such as customer demographic information, past purchases, or frequency of purchases. WorldCorp's internal database includes key contact information for each of their customers, order sizes and frequency of orders, and payment history. External databases are collected by data providers. Often, a business can purchase this data from a provider to obtain information on market demographics, competitor products, and industry statistics. Many sources of compiled data can be accessed for free. U.S. Census data, available at the United States Census Bureau website, is one example. This site provides a lot of varied information on U.S. residents, such as education levels and median incomes. The data can be filtered based on specific criteria, such as location. WorldCorp can use this census data to identify and evaluate new locations for warehouses. They can use the data to determine if a particular city has the employee base needed to open the new warehouse and what the salary ranges in the region are. Figure 11.2. United States Census Bureau website page for Kansas City, Missouri displays Missouri map with clickable information for populations and people, education, housing, families and living arrangements, income and poverty, employment, health, race, ethnicity. Figure 11.2. Using census data can help you gather a good deal of detailed information about a geographic location. Interviews and focus groups are also methods for collecting data such as customer preferences for a product or for understanding the impact of price changes, but they do not provide as much data for deep analysis. Excel is better suited for numerical information. However, some information from interviews and focus groups can be transformed into quantitative data. For example, if you ask potential customers if they would still purchase a product if the price increased by 5% or a certain dollar amount, you could record the number or percentage of respondents who replied yes and no to that question. Both methods can be time-intensive and generally provide information that is more exploratory in nature. The information gathered from interviews or focus groups can often help data analysts determine the appropriate data they might need for a more in-depth analysis. The information about a price change could then be further explored with more research to determine at what point a price increase becomes too much and the customer will no longer purchase the product. Spotlight on ethics. Is your information safe online? Database marketing is a business strategy that uses information collected on consumers to better market their products or services to them. This could include collecting information from people's online activities or buying information collected by marketing research firms on their purchasing habits. User data and information about online activities is collected at an astonishing rate. All of this available data brings up valid concerns related to privacy and protecting your information from unlawful activities. What's more, many people often provide sensitive information freely, such as when completing online surveys or taking social media quizzes that often are designed to determine usernames and passwords. In 2019, nearly 15 million people were the victims of identity fraud. Some strategies to protect yourself include using strong passwords and changing them often, only visiting trusted sites, using prepaid cards for online transactions, and hiding personal information when you can. You will also want to avoid providing personal information unless absolutely necessary and be mindful of how you use the sites you visit. Once data is collected, it can be grouped into two broad categories: qualitative and quantitative. The first category, qualitative data, is categorical information that does not include numbers, or if it does include numbers, those numbers do not have a true mathematical meaning. For example, a question on a class evaluation survey could ask the mode of delivery for the course and could be as follows: 1. In person, 2. Online, or 3. Hybrid. The numbers in this case do not have a meaning. Instead, they are placeholders to indicate the category you select. However, because Excel cannot analyze text information, converting the categories to numbers allows for some analysis of this qualitative data. Other qualitative data can be in the form of text that includes statements of opinion. For example, a customer review that reads, "This product is wonderful," is a qualitative assessment of the product. The second category, quantitative data, involves numerical evaluations. It could include numerical expressions of opinions, but also could be facts such as the cost of a specific product. Along with a glowing qualitative review of a product, a customer could also provide a rating of 5 on a scale of 1 to 5. In this example, the same assessment, the customer's opinion of the product, can be expressed in both qualitative and quantitative terms. This is similar in concept to what you might see for a product rating on an e-commerce site. A buyer can give a product 5 stars and add some textual comments about their experience with the product. Quantitative data can be further classified as discrete or continuous. Information that can only take on a specific set of values is called discrete data. For example, the number of customers in a store is discrete information. You cannot have a portion of a customer, so the number of customers in the store is restricted to certain values, in this case, whole numbers. Discrete data is counted. In contrast, continuous data is information that is measured and can take on an infinite set of values. For example, you could weigh yourself at home on a digital scale that only measures to 1/10 of a pound, i.e., 132.7 pounds. Your doctor might have a more precise scale that will display your weight in hundredths of a pound, i.e., 132.65 pounds. There is an infinite range to which the data can be reported, and it is constrained by the measurement device. Data is grouped by the level of measurement represented by the information. There are 4 categories of measurement into which all data can be placed: nominal, ordinal, interval, and ratio. The nominal level of measurement is the lowest level of analysis. With nominal data, the information can only be placed in categories. No category is more important than another, and the categories cannot be placed in any logical order. One example of nominal data is marital status. With 4 possible answers, single, married, divorced, or widowed, every response can be placed into one of the 4 categories. The next level of measurement is ordinal. At this level, data is placed into categories, but then those categories can be put in order. Ordinal data gives the company more information than nominal data does, but there is still not enough information for an in-depth analysis. The distance between the levels of the categories is not defined, but one category is of a higher order than another. A typical example is an opinion scale, often referred to as a Likert scale, figure 11.3. As a company, you know that you want customers to be very satisfied as opposed to unsatisfied. WorldCorp often uses this scale to get feedback on the customer's interactions with sales agents. They can then rank the responses to determine which sales agents are ranked higher than others. But what you do not know is the degree of difference between very satisfied and unsatisfied. Survey asks how satisfied are you with columns titled very satisfied, satisfied, neutral, unsatisfied, very unsatisfied. Rows display the responsiveness of the sales agent, the service you received, or company overall. Figure 11.3. A Likert scale is used to gather ordinal data that can be analyzed. Link to learning. Organizations often use surveys to gather data to inform their organizational and business practices. For instance, a business might send out a satisfaction survey to their clients, or they might survey employees regarding their work preferences. Regardless of the purpose, you will need to write questions and provide options for responses that will capture exactly the information you need to answer the questions you are asking. Read this article from SurveyMonkey regarding how to craft effective survey questions to learn more. The last 2 levels are interval and ratio. Both allow data to be put into categories, nominal, and establish an order of the categories, ordinal, but now quantitative data is added so that the difference between each category is defined. The key difference between interval and ratio is how they treat a value of 0. With the interval level, 0 acts as a placeholder rather than representing the value of 0 or the absence of something. One example is a survey question in which 0 represents a neutral response. In this case, the respondent has no strong feelings either way on the question being asked. In contrast, with the ratio level of measurement, 0 takes on the value of 0. If your product sold 0 units this week, there was an absence of sales for the product. Understanding the differences between these levels of measurement can help you determine the best strategy to analyze the data you have collected. Figure 11.4 summarizes the levels of measurement. Qualitative data. Nominal named variables, ordinal named and ranked variables. Quantitative data, interval named, ranked, and proportionately spaced variables. Ratio named, ranked, proportionately spaced variables that have capacity for true 0 value. Figure 11.4 the levels of measurement differentiate data based on the depth of analysis possible. Categorical data. Nominal and ordinal data make up categorical data, which is grouped into categories based on attributes or characteristics. Categorical data is considered qualitative data. The data can be represented with numbers, however, those numbers do not have a mathematical meaning. Some examples would be gender, marital status, or employment status. See Figure 11. 4. Numbers can be assigned to these categories to make analysis possible with Excel, but those assignments are arbitrary. For example, you could represent full-time employment with the number 1 and unemployment with a 0. The same analysis could happen if the numbers were 2 and 4. There is no mathematical meaning behind the assigned numbers. An advantage of using categorical data is that you can capture assessments of behaviors, opinions, and emotions. These concepts are not quantifiable, but using categorical data, you can assess and analyze these concepts to better understand the situation at hand. A disadvantage of categorical data is that deeper analysis using statistical methods may not be possible. Categorical data is often represented in a table format and graphically displayed with pie charts or bar charts. The data is most often analyzed through percentages in each of the categories of interest. Numerical data. The interval and ratio levels of measurement are numerical data. Numerical data is quantitative data and represents measures of variables, and it can either be discrete or continuous. The key feature is that the numbers have mathematical meaning with respect to the attribute or variable being evaluated. For example, a manager could determine the distance between two office locations in miles to determine the mileage reimbursement for employees traveling between the two sites. Other examples include the length of time waiting for a table at a restaurant, the amount of money spent by a customer at a particular shop, or the fuel efficiency of a vehicle. Figure 11. 5. The advantage of using numerical data is that you can do in-depth analysis with statistics and use the data to develop predictions for future performance. This could be helpful for a business to forecast sales in the next quarter or predict expenses for the next year. Numerical data can be graphed using scatter plots and histograms. The data can be analyzed using various statistical methods. These could include mean, mode, median, standard deviation, and regression modeling. Chart for data splits into categorical and numerical groups. Categorical splits into nominal and ordinal groups. Numerical splits into interval and ratio groups. Figure 11. 5. Categorical data can be used for behaviors and emotions. Numerical data is used for more objective information such as distances or sales figures. What is data validation? Data validation is another technique that can be used to verify data. In essence, data validation is the process of ensuring that the data values fall within a predetermined range. For example, if you know that there are only 15 sales agents at WorldCorp, you can use data validation to make sure that the values assigned to various sales transactions in the monthly sales data spreadsheet are only whole numbers from 1 through 15. Data validation can also be used to ensure that product codes for the HDTVs sold by WorldCorp are accurately entered into the spreadsheet. Two components are often used to ensure you are working with quality data: data verification and benchmarking. The process that ensures your data is accurate and reliable is called data verification. It is important to check the accuracy because if the data is not valid, then any analysis using that data will also be invalid, which could lead to critical mistakes if key strategic business decisions are based on the inaccurate data. WorldCorp could use data verification to ensure that product codes or prices are entered correctly into the spreadsheet used by the accounting department. You can imagine the issues that could arise if the price entered is incorrect. WorldCorp could be charging customers incorrectly for the product, which could lead to issues with both internal record-keeping and external customer relations. There are several approaches to checking the validity of your data. One way is to check the data that has been inputted in the spreadsheet against the original paper copy of the data. You could also use benchmarking, a tool that checks the validity of your data with similar datasets or a set standard. Benchmarking involves checking specific values such as price points or sales projections against known standards. These known standards could be from competitors or from established company goals. Sometimes, standards are set by government organizations as well. WorldCorp could use benchmarking to evaluate their product shipping speeds and costs versus that of their closest competitor. If their competitor ships products faster and at a cheaper price, WorldCorp might decide to investigate the impact of lowering their prices. Benchmarking can also be used to measure how your company's sales are growing versus that of your competitors. Benchmarking against industry-wide data is also commonly used when assessing the performance. The benchmarking process can help a company determine where there might be gaps in performance compared with the competition or ways to enhance their position in the marketplace. The process and techniques of data validation. Data validation techniques can be used to ensure that quality information is being used in decision-making. Errors can occur when inputting data into the spreadsheet. Data can be entered in the cell incorrectly, data can be accidentally duplicated, or numbers can be transposed. Through data validation, many of these common errors can be identified, and then the user can correct those errors as appropriate. Data validation can also be used as a part of ongoing process improvement efforts in conjunction with benchmarks from key competitors or industry values. The tools available in Excel for data validation help ensure that your data has as few errors as possible and check business performance against internal standards or competitors. Spotlight on ethics. Keeping accurate data. Professional ethics dictates that businesses keep accurate and up-to-date information and data. This includes information they may collect with consent from clients and internal business information, as well as information they may create and consume in their interactions with external stakeholders across all platforms, including in spreadsheets where much of their financial information will likely be found. As such, quality data is accurate data, and businesses can incorporate a number of ways to ensure data is recorded accurately, such as using Excel's data validation capabilities. Data validation simply means we have a process in place to ensure the information is entered correctly and that it is appropriately checked to ensure it is both accurate and useful. For instance, businesses can ensure employees use effective and accurate data entry practices, such as shortcuts, autofill, and drop-down menus. In addition, Excel can also restrict what content is input in certain cells to ensure it is correct. For instance, you can use data validation to have Excel reject an entry of 00000 as a valid phone number. In Excel, you would enter this validation criteria in Data Validation Settings, Data tab, Data Validation, then select Settings. You can also prompt the person entering the data with an input message, giving them instructions to enter specific information in a cell. Data validation. The process of validating data is made easier with Excel. There are several ways to customize the validation processes to meet specific needs. One simple validation approach is removing duplicates. You access this tool through the Data tab. This function is helpful if you are unsure whether there are duplicate entries in your data. Consider an example in which there are 20 employees at WorldCorp's warehouse location in Portland, and each of those employees has a unique company identification number. In a spreadsheet keeping track of the number of days of vacation remaining for the year for each employee, you would not expect to have more than one line per employee. For a dataset of only 20 employees, it would be easy to identify a duplicate entry. But what if your company had 2,000 employees? This could take a good bit of time to manually identify duplicates. To remove duplicates from your data, first open the spreadsheet that you want to examine. Click on the Data tab and then on the Remove Duplicates tool, Figure 11.6. Remove Duplicates is selected. Pane displays employee and days left selected in columns. Column in spreadsheet lists two columns. Employee and days left. Duplicates are visible in rows 8 and 9. Figure 11.6. The Remove Duplicates dialog box allows you to choose the data from which you need to remove the duplicates. Used with permission from Microsoft. The dialog box that opens has several options. First, ensure that the box next to My Data has headers is checked if your data has a header row, as shown in Figure 11.6. Then, choose which columns you want to check for duplicates. In this case, you will check both columns for rows that have duplicate data in both. The removal of the duplicate information in this example requires checking both columns and only occurs if both columns have duplicate information. You can check only one column if desired as well. In this example, though, you choose both columns because the information is grouped by rows. Thus, the employee number is matched up with their days of vacation left. After you've chosen the data to check, click OK. Notice that employee number 2959, rows 8 and 9, appears twice with the same number of days left. Excel will remove one of these entries. If you had only selected the first column, Excel would delete any rows that had duplicate information in column A, regardless of the content of column B. For this reason, you need to be careful to ensure that your criteria will not unintentionally delete too much data. Once the tool has finished removing duplicates in the selected data, Excel will notify you of the number of duplicates that were removed from the selection and indicate how many unique values remain. Figure 11.7. Microsoft Excel dialog box reads, 1 duplicate values found and removed, 20 unique values remain. Duplicate cells A9 and B9 are no longer visible on the spreadsheet. Figure 11. 7. The Remove Duplicates tool removed employee 2959 who appeared twice in the data from row 9. Used with permission from Microsoft. Further validation of data can be accomplished using Excel's Data Validation tool accessed through the Data tab in the Data Tools command group. This tool checks a selection of data to determine if it falls within a specific range of numbers. There are several options available with the Data Validation tool. You can set the tool to check the data within a certain date range, to verify if all numbers are whole numbers, or to check for all positive numbers. You can also create a drop-down list of options from which the user can choose. Additionally, you can set the tool to display an error message when a data point does not meet the criteria you have established. How to add data validation. Adding data validation means that you are requiring that a dataset meet certain specifications to be deemed valid. If these specifications are not met, the formula will not work. To demonstrate how to add data validation, you'll go back to the example of employee vacation days. In the spreadsheet, first select the data B2, B21 you want to examine. Do not select the column headers when selecting the data. Only highlight the numerical information. Next, click on the Data tab and choose the Data Validation tool. Figure 11.8. The Data Validation window will open. Once open, there are 3 tabs available. Data Validation is selected from Data Tools command group in Data tab. Pane with Settings tab selected. Validation criteria selected. Allow. Any value and data between. Column B is selected in Spreadsheet. Figure 11.8. When using the Data Validation tool, first select the data and then choose the tool from the Data Tools command group. Used with permission from Microsoft. The Settings tab allows you to set parameters ranges for the data validation. Assume that each employee is allocated 2 weeks or 14 days of paid vacation per year. This simple spreadsheet shows the number of vacation days remaining for each of the employees. Make sure that all entries are from 0 through 14. Using the Settings tab, change the value box under Allow to indicate a whole number. Figure 11.9. Then, under Data, choose less than or equal to and enter 14 in the maximum box. Examine the other options available under Data. You could choose to have the number fall between 2 values. You could select greater than or equal to, and not between 2 values. The many choices will accommodate most data validation needs. Data Validation pane has Setting tab open and options selected in validation criteria include Allow. Whole number, ignore blank checked, date, less than or equal to, maximum, 14. Spreadsheet column B selected. Figure 11.9. Use the Allow and Data fields to change the parameters of the data validation. Used with permission from Microsoft. Next, go to the Input Message tab. This is used to show a message to a user of a spreadsheet when they click in a cell to add data. For example, this message could indicate that the number must fall within a certain range. This is particularly useful if you have multiple users for an Excel spreadsheet. Finally, the Error Alert tab will display a message to the user when they have entered an invalid entry. There are 3 different types of errors available. The Stop error gives you the option only to retype an entry or cancel. The Warning error allows the user to add an entry that is not in the predetermined list. Finally, the information error simply states to the user that the entry does not match the validation rules, but the entry is still allowed. When an entry triggers an error, a small green triangle will appear in the upper left corner of the cell. Clicking on the triangle will show what caused the error. Finally, you have the option to not display an error alert at all. By selecting this checkbox, all entries are permitted. Once the parameters and messages are established in the previous steps, click OK. Now, using those settings, Excel can check the data. Under the Data Validation tool, click on the small down arrow to the right of the button to open the additional options. Select Circle Invalid Data. You then will see all data that does not meet the established criteria circled in orange, Figure 11. 10. Data Validation button in Data Tools is selected. Opens to options for Circle Invalid Data selected other options. Data Validation, Clear Validation circles. In Spreadsheet, data in cell B821 is circled. Figure 11. 10. You input the settings for validating data with Data Validation. Then, to do the validation, choose Circle Invalid Data. The circle is placed around data that does not meet the parameter of the data validation. Used with permission from Microsoft. You can clear the circles by clicking on Clear Validation Circles. To remove data validation entirely, select the Data Validation tool and in the lower left, choose Clear All. This will clear the validation rules from the cells. Here are the general steps for using the Data Validation tool to find invalid data. Highlight the desired data, include only numbers, not text. Click on the Data tab and select the Data Validation tool. Set the parameters for the validation under the Settings tab. Set an input message if desired. Set an error alert message if desired. Click OK. Choose Circle Invalid Data under the Data Validation tool to identify data that does not meet the parameters established in Step 3. Data Validation List. Creating a data validation list is a convenient way to ensure that only specific values are entered into a spreadsheet. The user chooses the appropriate response from a predetermined set of values, which can be numbers or text. This assures that only acceptable values will be entered into the spreadsheet. For example, let's add a column to the employee spreadsheet that indicates the employee's location. Suppose the company has 3 different locations: North, East, and South. The management team may want to review staffing at the various locations when vacation time is used, so this column might provide helpful information for scheduling purposes. To create a data validation list, first click in an empty cell on the spreadsheet. Then, access the Data Validation tool. On the Settings tab under Allow, choose List. In the source, you have 2 options. You can input text or values into the box separated by commas, Figure 11. 11a, or if you have the list already in the named range, you can reference the named range in the source box, Figure 11. 11b. By using the cell range reference, the drop-down list is dynamic and will update if you change the source list. This is often the preferred method unless it is certain that the options will remain the same. A. Data validation pane displays source, north, east, south. B. Data validation pane displays source equals lists, A$1, A$3, Figure 11. 11. When establishing a data validation list, you can A. Directly enter the text or values, but it is preferred to use B. Cell references so that the drop-down list is dynamic. Used with permission from Microsoft. Either method will give the user a drop-down list to choose from when inputting information into the spreadsheet, Figure 11. 12. If the list needs to be copied to other cells, it can be copied using the paste special technique. See Essentials of Software Application for Business. Headers in a table include employee, column A, days left, column B, location, column C. Cell C2 displays a drop-down button open with these options: north, east, and south. Figure 11. 12. The drop-down list will show the text from the data validation list so the user can choose from the permitted values. Used with permission from Microsoft. Custom data validation rules. If there are specific validation needs that are not covered by the existing built-in choices in data validation, you can create a custom data validation rule. This allows you to set your own parameters for the cells. Open the Data Validation tool and in the Allow drop-down menu, choose Custom. This offers a great deal of flexibility to use formulas and functions in data validation. You can use any of the available functions for data validation, even those that look at text or characters. Using data validation to look at text or characters could help you identify product codes or city names that were spelled incorrectly. Using the employee vacation list, let's add the employee names to the data. Create a column called Name. To ensure that only textual information is entered into the cell, you will use the Custom Data Validation option. Open the Data Validation tool. Select Custom. In the formula bar of the window, use the ISTEXT function to restrict the entries to text data only, figure 1113. You can also add an input message and error alert if desired. Click OK. Data Validation pane displays setting tabs selected with validation criteria selected. Allow, Custom, Ignore blank checked, Date, Between formula. Is text B2? Column B is highlighted and cell B2 selected in Spreadsheet. Figure 11:13 Data validation can be set to ensure that only text is input into a cell or group of cells. Used with permission from Microsoft. If the user tries to enter a number in the cell and you have enabled error alerts, an alert message will appear. Other custom data validation rules include not allowing any punctuation, restricting entries to not exceed a certain total, or entering data within a specified range. The Custom Data Validation Rule option helps to ensure the accuracy of data entered based on scenarios that are appropriate to your specific application. These options are useful when creating spreadsheets that have multiple users. Data quality issues can be mitigated by setting up validation rules or adding drop-down lists. Data validation, along with other skills, such as protecting sheets or cells, can be critical to maintaining the integrity of the spreadsheet and the data analysis built from the information in the spreadsheet. Editing validation rules. To edit existing validation rules, first identify the cells where data validation rules are located. To do this, on the Home tab, go to Find and select on the far right side of the tab and choose the down arrow. When the menu appears, choose Data Validation. This will highlight all cells that have data validation rules. To view the parameters of that rule, simply click in one of the highlighted cells. Then, go to the Data Validation tool. The tool window will appear and list the restrictions of the data validation rule. If you want to make any changes, you can make them here. However, before closing the window, ensure that you check the box next to the instruction, apply these changes to all other cells with the same settings, figure 11:14. This will then apply the changes to the other cells with the same data validation rule. Data validation pane displays box checked for apply these changes to all other cells with the same setting, figure 11:14. Be sure to select this checkbox to apply changes to all cells using the same data validation rule. Used with permission from Microsoft. Organizing and presenting data. A benefit of using Excel to organize data is the wide variety of formatting choices available for presenting the information in a professional manner. Remember the basic formatting concepts you learned in working with spreadsheets. Organizing the data in a table format with headers, colors, and other formatting options makes the information visually appealing and often makes it easier to understand. This is especially important when dealing with a large spreadsheet of information. When formatting data in your spreadsheet, there are a few settings that will allow you to present the data in a more professional way. Adjust the alignment so that numbers are aligned to the right and text is aligned to the left. This allows users to easily distinguish between text and numerical information. Add formatting to column and row headings, such as bold fonts or a larger text size. You might consider adding a border to the header row, but avoid using all capital letters in the header row because it makes text difficult to read. Filler colors can highlight your header row or make it easier to distinguish between rows of data. Too many colors, however, can distract from the professional look of the spreadsheet. One clean and simple way to distinguish rows is to use a light gray filler for every other row or column, as illustrated with the World Corp dataset from the previous chapter, shown here in figure 11:15. When choosing fonts for your data, use only one font and use fonts that are easy to read, such as Times New Roman or Calibri. Avoid script fonts and fonts that look artistic. Adjust column widths and row heights to make the spreadsheet more readable. In large datasets, consider freezing the header row so that when the user scrolls, the column headings remain visible. To do this, go to the View tab, select Freeze Panes, and then freeze top row. This keeps the top header row visible while scrolling. There are many built-in settings that might be useful when formatting your data for a professional look. You can access them through the Cell Styles menu on the Home tab. See Working with Spreadsheets. Row 1 displays headers in bold with highlighted blue background. Cell borders display thicker black lines. Data in rows 2-11 is alternate gray-white backgrounds. Thick border line is seen below row 11. Figure 11. 15 built-in cell styles make datasets with many rows more visually appealing. Used with permission from Microsoft. Another way to present data in a spreadsheet is to display it in a graphic format. The type of chart or graph you should choose depends on the type of data. For example, a bar chart is appropriate for categorical data, while a line graph is appropriate for numerical data. When the data includes categories that equal 100%, a pie chart, figure 11. 16 is an effective option, such as with the data presented in figure 11. 15. Using a pie chart with the data, you can see the proportion of each product compared with each other. Charts will be covered in more depth later in data analysis charts. Pie chart labeled products displays different sized slices of the chart in various colors and percentages. At the right, a list of colors and what they represent is seen in a column. Figure 11. 16 pie charts are an effective way to visually represent data when categories equal 100%. Constructing a data table. To add even more functionality, you can format data to be an Excel data table, rather than simply a table of numbers. Using the data table formatting sets the data as a separate object in the spreadsheet. It is more than simply adding column or row headings. This feature allows you to easily add rows or columns, is automatically formatted to look professional, and allows you to quickly sort and filter information with a filter button at the top of the column. The table will automatically expand with the insertion of new rows or columns, and the preset formatting will carry over to these additions. Column headings are always visible without manually freezing the row, and formulas entered into cells are automatically applied to all cells in that column. Although these functions are available without formatting a set of data as a data table, working with the data is much easier if it is set this way. You can create a data table from scratch and then add the data at another time. However, it is often easier to work from an existing spreadsheet of data to create the data table. To do so, open the Pivot Table Data tab in the downloadable Chapter 11 Data File Workbook. There are two ways to format the data as a data table. For both, first highlight the data you want to convert to a data table. Then, press Ctrl+T, which opens a small window showing the selected range and a checkbox if the data contains a header row, figure 11. 17. Click OK. The other method is to click on the Home tab and choose Format as a table in the Styles command group. Create Table pane window is open. Where is the data for your table? Equals $1. $18 is visible. My table has headers is checked. Entire spreadsheet is selected. Figure 11. 17 To create a data table, first select the columns and rows to be included in the table. Used with permission from Microsoft. Once you click OK, you will notice that your data looks different. There are drop-down arrows associated with each column, and there is a new tab in the ribbon, the Table Design tab, figure 11. 18. Table Design tab is selected. In selected spreadsheet, drop-down arrow in column F header is indicated. Figure 11. 18 When data are in a data table, you will see a Table Design tab for formatting options. Used with permission from Microsoft. The Table Design tab appears when you click inside the data table and allows you to customize the table. You can change the color scheme, name the table, summarize the data, and refresh the information. The drop-down arrows on each column header allow you to filter and sort the data. You can sort the data in many ways, and you can filter the data to only show selected information. You could sort this example to show certain destinations, such as Metairie, LA, figure 11. 19. Open pane options. Sort A to Z, sort Z to A, sort by color, sheet view, clear filter from destination, filter by color. All text filters selected, destinations listed in column H. Figure 11. 19. The drop-down menu with each column in a data table is a convenient way to filter information. Used with permission from Microsoft. To accomplish this, select the down arrow in the destination column. Then, deselect all the destinations except Metairie. This will filter the entire table to only display those products for Metairie. Figure 11. 20. You can tell that the data is filtered because the row number starts at a number other than 2. Row 1 is the header row. In this case, it starts at row 6. The other data is still contained in the table, but it does not display when this filter is applied. Also notice that the drop-down arrow changes to a funnel icon to indicate that the table has been filtered based on the information in this column. To remove the filter, click on the funnel icon and choose Clear Filter. This will remove the filtering from the table, and it will return to its original form. The funnel icon will change back to a drop-down arrow. If you do not want to filter your data, you can choose to not have the filter buttons displayed in your table using the Table Design tab in the Table Style Options command group. You can also use the Table Styles Options command group to add a total row to your data table. Table Style Options command group options: header row, total row, banded rows, first column, last column, banded columns, filter button. In Spreadsheet, filter button is visible on right side of cell H1. Figure 11. 20. Customize the data table using the options in the Table Style Options command group. Used with permission from Microsoft. To customize the color scheme of the data table, choose the Table Style Options command group in the Table Design tab. There are many color choices and designs to choose from. You can also create a custom style, perhaps with your company colors, by choosing New Table Style. A window appears that allows you to format each section of the table with various fonts or colors. Another benefit of using data tables is that you can easily summarize the data using pivot tables. This feature allows you to display the data in various ways to better analyze the information. You can create subtotals and summations of various factors within the table. To use this feature, choose Summarize with Pivot Table from the Tools command group on the Table Design tab. We will discuss pivot tables in Pivot Tables charts. If you no longer want to use a data table object for your data, you can revert it to a regular data range. Choose Convert to Range in the Tools command group on the Table Design tab. This will keep all the formatting but will leave the data as a range rather than a data table object in the spreadsheet. This makes it easier to copy and paste the information into a document or a presentation when communicating the analysis to others. 1. Variable data tables. Data tables allow you to change cell values and see the result those changes have on other cells containing formulas. The tables can be used to evaluate possible scenarios to help make decisions within a business. Often, data tables are used to understand the financial implications of decisions. Data tables can use one variable or two variables. The data table tool is part of the What If analysis options on the Data tab. A one-variable data table investigates the impact of manipulating a single cell on another cell. Imagine you are interested in looking at the impact to your company's overall profit if the price of one product is changed. Begin by setting up a model of the current data. For this example, let's look at WorldCorp's 32 LCD TV that sells for $170 and costs WorldCorp $85 to make. Let's assume that marketing and administrative costs are $5,000 annually. You can set up an initial spreadsheet that reflects the current model and an abbreviated income statement to show the company profit. Figure 11. 21. The formulas are shown in column D so that you can see how the cells were calculated. In the spreadsheet, cell C10 is selected and equals C8, C9 is visible in the formula bar. The data in cell C10 is $738,920. Net income. Column D lists the formulas that are used. Figure 11. 21. For a one-variable data table, you will model a single variable such as net income. Used with permission from Microsoft. You are interested in seeing the impact to profit, or cell C10, in this example. The value in this cell becomes the top row of the data table, so repeat it below the model. Next, identify the new prices to investigate. With a one-variable data table, those values are placed in the column to the left of the impacted cell. In this example, put the values in column B, starting in the row below the impacted cell. At this point, you can format the values using the currency style to be more representative of what is being investigated. Then, select the cells to include in the data table, including all the price level changes being evaluated. Now, construct the data table. Go to the Data tab, click the arrow next to What If Analysis, and select Data Table from the list Figure 11. 22. When the input window appears, choose the input value price in this example in the column Input Cell box. You only use the column Input Cell for a one-variable data table, Figure 1123. Notice the dotted line around the input cell and the highlighted region for the data table. Click OK. A. Data tab is selected. What If Analysis button selected. B. Data tab is selected. What If Analysis button opens to options. Scenario Manager Goal Seek Data Table selected. Figure 11. 22. A. For the new data table, first choose the What If Analysis option from the Data tab. B. Then select Data Table from the drop-down menu. Used with permission from Microsoft in Spreadsheet, cell C2 with $170. Price per unit is selected. A partially blank table at lower corner is selected. Data table pane displays row input cell and column input cell, C2, Figure 11. 23. The impact of the price per unit on overall net income is the desired output. Used with permission from Microsoft, when you click OK, Excel will use the information from the model to calculate the net income at each of the price points, Figure 11. 24. In Spreadsheet, cells B14, B18 list costs from $160 to $185 in $5 and $10 increments. An arrow points to a bracket highlighting cells C14 to C18, which list the numerical data. Figure 11. 24. The change in net income due to the change in the price per unit is automatically generated. Used with permission from Microsoft, Excel shows that if the price point per unit is adjusted to $165, the net income will be $695,160, as shown in cell C15. When Excel creates the data table, the results are not automatically formatted. You can format the information after the data table is created, or you can set the number style to accounting or currency for the cells C14. C18 prior to creating the table. This simple example demonstrates the value of creating a data table. Excel quickly calculates the impacted cell values based on the predetermined formulas. This allows the decision maker to see all options in a single table. Two-variable data tables. Often in data analysis, there is more than one variable. You may need to investigate the interaction between two variables to get more information. For example, a two-variable data table could analyze the performance of various locations during each quarter of the year, or could examine different production levels at various price points to investigate the impact on profit. Let's continue with the example of product price and impact on profit and add various quantities sold into the analysis. Again, the target impacted cell is C10, net income. Put the quantity values across the top of the table and the prices down the side, as with the one-variable data table. Format the output cells D14, H17 as currency. Next, highlight the table area and go to the Data Table tool in What If Analysis. For the row input cell, choose the hash units C4, and for the column input cell, use the unit price C2. Click OK, Figure 11. 25. Notice the output cells are formatted to the currency style. As a manager, you can see the impact on your profit outlook when you change the two variables. Figure 11. 26. For example, if the price is lowered to $165 and you sell 9,500 units, your profit would be $755,000, cell G15. Data table pane displays. Row input cell, C4, column input cell, C2, cell C2 $170 is highlighted. Partially blank table at bottom is selected. Figure 11. 25. Two-variable data tables can manipulate two cells. Use the Data Table tool to enter your input cells. Used with permission from Microsoft, the data table in cells C13 to G18 is populated with monetary values in cells D14 to G18. Figure 11. 26. The final data table shows the impact of changing one or both variables. Used with permission from Microsoft, visualizing mixed variables data collected by businesses comes in a wide variety of forms. It may not always be numerical. It might include income or age data reported as ranges of numbers rather than an exact number. Sales data may report a purchase was made but not include the sales price. The data table in Figure 11.27 includes both numerical data, the number of units sold, and categorical data, the sales agent. Summarizing both categorical and numerical data in the same table is appropriate and useful in many cases. The data can also be visually presented with a combination of charts and graphs. However, for any in-depth analysis, you will need to adjust the categorical data. A spreadsheet lists headers in row 1 with drop-down arrows at the right of every bolded header. Data in the spreadsheet is a mix of dates, text, and numbers. Figure 11.27. Information in a data table can be numerical or categorical. Used with permission from Microsoft, one strategy to adjust categorical data is to replace the text with a numerical value. Using the data in Figure 11.27, you could replace all instances of Antonio with the number 1, Isabel with the number 2, and James with the number 3. When making a substitution like this, be sure the spreadsheet includes a legend that identifies each category and its corresponding number. This could be a simple chart on the same worksheet or on another worksheet that explains what each number represents. When there are only two categories, such as a yes-no question, you can use the binary system with 0 for no and 1 for yes. Using the Find and Replace tool makes the process of changing text to numbers easier. Categorical data combined with numerical data can also be analyzed using pivot tables. Learning objectives: by the end of this section, you will be able to use basic statistical functions to describe a dataset, describe other useful functions for data analysis in Microsoft Excel, use the data analysis tool for advanced statistical functions, understand the Solver add-in, and its use for data analysis. Data surrounds us. In business, there is always a need to better understand the company, the competitors, and the customers. You gain this understanding through data collection and data analysis. The field of statistics is centered on analyzing and making sense out of data. You may have taken a statistics class at some point, but even if you have not taken a statistics class, you have probably used some statistical concepts, maybe more often than you think. Concepts such as averages and probabilities are often applicable to everyday life. For example, you may have been exposed to some statistical concepts when learning about political candidates prior to an election. This could include the percentage of registered voters of a particular demographic or the correlation between geographic location and political party. Statistics can be applied across nearly all fields and situations, and there is almost always a need to know more and dig deeper into what the data are showing. There are two branches of statistics: descriptive and inferential. Descriptive statistics, as the name implies, describe situations. For example, the average transaction amount for purchases in a store at a specific location is descriptive information about that location. Another example of descriptive information is the turnover rate of employees in a manufacturing facility. Inferential statistics relate to predicting and forecasting. With inferential statistics, you are using historical data and trends to forecast future performance. The regional sales manager might use the last 5 years of sales data to make a forecast for this year's total sales. A nonprofit organization might use historical fundraising efforts to make predictions about fundraising for the next 2 years. Both branches are useful in understanding data. Information garnered from statistics can be used in a variety of ways in businesses to improve performance and track progress. Microsoft Excel has a variety of tools to make statistical analysis easier. Basic statistical functions: there are several commonly used statistical functions that can give you a basic summary and understanding of the information in your spreadsheet. You can access the functions through the Formulas tab. From this tab, you can either choose Insert function on the far left of the tab or use the grouped functions in the function library, Figure 11.28. The function library is helpful if you are not quite sure of the appropriate function for your needs. The functions are organized by application, e.g., financial, and include the ones that are most commonly used. Formulas tab selected. Insert function button is highlighted on toolbar. Function library toolbar options. AutoSum recently used financial, logical, text, date and time, lookup and reference, math and trig more functions. Figure 11. 28 functions can be found in the Insert Function tool or in the function library. Used with permission from Microsoft, using the Insert Function command has some advantages. When you click on Insert Function, a window appears with the functions grouped by category like in the function library, and then listed alphabetically within each category. When you click on a function, a brief description of the function appears in the window. There is also an option to search for functions by typing a description or keyword. This is useful if you are unsure of the function's purpose. Figure 11. 29. Insert Function pane displays options. Select a function displays multiple options for selection. Count selected counts the number of cells in a range that contains numbers. Reads at bottom. Figure 11. 29. The Insert Function window lists all the built-in functions in Excel. Used with permission from Microsoft to use functions, first, click in the empty cell where you want to put the function. Then, use either the Insert Function option or the function library to select the function. For this example, you will choose the average function to calculate the average of a list of data. When you select a function from the Insert Function window, an input window will appear where you will select the range of data for analysis. Figure 1130. After you select the range, click OK. Notice that the result of the function is displayed in the lower left of the input window. Also notice that a dotted line will surround the data identified for analysis. The function will also be visible in the formula bar. Function arguments pane displays formula result equals 555 at bottom left. Column B is selected in Spreadsheet. Figure 11:30. The input window to insert a function will display the answer for the given function at the bottom of the window. Used with permission from Microsoft, when you select a function from one of the groups in the function library, the function will appear in the spreadsheet. Figure 1131. You can select the data for analysis and press Enter. A dotted line will still appear around the selected range of cells, and the function still displays in the formula bar. Cells B2, B21 highlighted in Spreadsheet, average displays in selection bar. Formula bar reads equals average B2, B21. Cell E3 is selected with equals average B2, B21 inside. Window below shows average number 1, number 2, figure 11:31. The selected cells for the function are displayed on the spreadsheet. Used with permission from Microsoft, one of the most commonly used functions is sum. It even has its own button on the Home tab as the AutoSum feature. Figure 11:32. The function gives the total for a selected range of cells. Other commonly used functions in data analysis are mode, range, median, and average, which returns the mean of a selected range of data. An arrow points to the AutoSum shortcut on the toolbar. Figure 11:32. The AutoSum shortcut is a very useful tool. Used with permission from Microsoft, other useful functions. There are several other functions available that are not specifically statistical functions, but they can be quite useful when dealing with large datasets or with text. Some of these were covered in advanced Excel formulas, functions, and techniques. These functions can help you manage and sort datasets of any size. Table 11:1 summarizes some useful functions for data analysis. Function definition AVERGIF returns the average of a range that meets specific criteria. Counts the number of entries in a range. CONTIF returns the count of a range that meets specific criteria. CORR returns the correlation between two ranges of data if tests a condition, and returns a predetermined value. Max returns the maximum value in a range. Min returns the minimum value in a range. SUMIF returns the sum of a range that meets a specific criterion. SUMIFS returns the sum of a range that meets multiple specific criteria. Table 11:1 numerical functions. Let us look closer at the AVERGIF function. It returns the average of a selected range according to a set of criteria. As with other functions, it is accessed through the Insert Function button on the Data tab or from the function library. When selected from the Insert Function tool, an input window will appear with 3 arguments to fill in Figure 11. 33. In the first box, input the range to examine against the criteria. In the second box, set the criteria, and in the third box, input the range of numbers to be averaged. Both formulas and text can be entered into the criteria. Be sure to put text elements in quotation marks when establishing criteria. Function Arguments pane displays AVERAGIF category options, range, criteria, average range. Finds average arithmetic mean for the cells specified by a given condition or criteria. Reads below, Figure 11. 33. The AVERAGIF function returns the average of a selected range according to a set of criteria. Used with permission from Microsoft, let's revisit the employee vacation data and use it to find the average number of vacation days employees have remaining for the North location. The criteria range is the location column D2, D21, the criteria is North, and the average range is the days left column C2, C21, Figure 11, 34. The function then returns the average number of vacation days remaining for all the employees in the list at the North location. Function Arguments pane displays range D2, D21 equals East, North, South. North, Northeast, criteria North equals North, average range C2, C21 equals 4853880, 214296369111 1314130. 8. Finds average arithmetic mean for the cells specified by a given condition or criteria. Reads along bottom. Figure 11. 34. The function can use categorical data as criteria instead of just numerical information. Used with permission from Microsoft, in some cases, you might need to evaluate data using more than a single criterion. The AVERAGIFS, COUNTIFS, and SUMIFS functions give the flexibility to add additional criteria. Just remember that each criterion must be matched with a range where the function will search, Figure 11. 35. To add an additional criterion with its corresponding range to the analysis, simply press the Tab key on your keyboard and additional criteria will be added to the function arguments. Function Arguments pane displays options in AVERAGIFS category. Average range, criteria range 1, criteria range 2, criteria 2. Below reads finds average arithmetic mean for the cells specified by a given condition or criteria. Figure 11. 35. If multiple criteria are needed, use the AVERAGIFS function. Used with permission from Microsoft, the functions we have discussed so far deal with numbers, but there are some functions that are useful for dealing with text. These can be particularly helpful when you are importing data into a spreadsheet. These functions can separate out parts of text or take the first several characters and put them in a separate column. Table 11. 2 summarizes some useful functions for managing text in a spreadsheet. Function Description Concatenate combines information in multiple cells into one cell left, will extract characters from the left of text right, will extract characters from the right of text trim, remove spaces from cells except the single space between words. Table 11. 2 text functions. The concatenate function is useful when data comes from a database or other files. It combines information from multiple columns into a single column. For example, data imported into an Excel spreadsheet often contains first and last names in separate columns. With the concatenate function, you can easily combine those 2 columns into a single column. To use the function, select the text elements that you want to combine into one cell. Figure 11. 36. To include a space in the text 2 argument, insert quotation marks with a space between. This will then output the first name last name correctly spaced. Figure 11. 37. Use autofill to copy the concatenate function through the entire list. In newer versions of Excel, the function has been replaced with CONCAT, which includes additional features. Function Arguments pane displays options. Text 1 A2 equals Rachel, text 2 equals, text 3 B2 equals Kesterson, text 4 blank equals text. Formula result equals Rachel Kesterson is in left corner. Figure 11. 36. The concatenate function can be useful when importing data from a database. The CONCAT function takes data from 2 columns. Used with permission from Microsoft, cell D2 is selected and equals concat A2. B2 is in the formula bar. Cell D2 is populated with Rachel Kesterson. Figure 11. 37. Then, the concat function combines it into one column. Used with permission from Microsoft, the text-to-columns tool on the Data tab is the opposite of the concatenate function. It takes a single column of text and separates it into two or more columns. This tool is also a helpful tool if you are importing information. Sometimes data imported from another program might not be in the format you desire or need for further analysis. For example, you can use this tool to place first name and last name in a separate column if they are imported into a single column. Text to columns can also be used to separate out city, state, and zip into columns. Data analysis tools. Add-in Excel has many advanced data analysis tools available. These include a wide variety of simple and more complex statistical functions that are available as individual functions in Excel, but it is easier to access the tools through the add-in called Data Analysis. This add-in puts all the statistical tools together in one place. As this section discusses these tools, it will keep the focus on using the tools within Excel and not on statistical techniques, their assumptions, and usage for data analysis. You can learn more about those topics in a statistics course or resource. Some of the most commonly used built-in tools include correlation, descriptive statistics, histogram, and regression. Additional advanced tools include analysis of variance (ANOVA) and several tools for testing hypothesis, including the F-test, T-test, and Z-test. Excel also offers a helpful feature to guide you through ideas for analyzing your dataset, called the Analyze Data Help feature, accessed on the far right side of the Home tab, Figure 11. 38. This tool allows you to search for helpful functions or Excel tools to analyze your dataset. A pop-out will appear on the right side of the screen, listing a few examples of ways to understand the data better. If you are finding it difficult to get started on analyzing a dataset, this might be an effective way to generate ideas as you work through the information. Suggested items for data analysis might include charts, graphs, or a pivot table. In the toolbar, the Analyze Data button on the Analysis command group is circled. Figure 11. 38. The Analyze Data tool offers some suggestions to analyze a dataset. Used with permission from Microsoft. Link to Learning GCF Global. Org provides 100% free online courses in a number of topics relevant to career preparation. This includes a variety of technology and computer skills courses. They currently offer a number of micro courses in Excel. Go to this page to see a list of these courses as well as others offered on the site. Getting the Data Analysis tool. Because the data analysis tools are an add-in, they are included with Excel but generally not installed by default. To obtain the add-in, go to the File tab, select Options, and select Add-ins. From there, click on Analysis Tool Pack and select Go at the bottom left of the window, Figure 11. 39A. Then, select the checkbox for Analysis Tool Pack VBA, and Solver Add-in. Click OK, Figure 11. 39B. This will add both the Data Analysis tool and the Solver add-in to the far right side of the Data tab, Figure 11. 40. Add-ins is selected in Excel Options. Add-ins window displays options for Manage, Excel Add-ins. Go button is located to the right. OK button visible at bottom right. Figure 11. 39. Select Go instead of OK to add the Analysis Tool Pack. Used with permission from Microsoft. Add-ins available options. Analysis Tool Pack selected. Analysis Tool Pack VBA selected. Euro Currency Tools and Solver Add-in selected. Provides data analysis tools for statistical and engineering analysis. Reads across bottom. Figure 11. 40. Select Analysis Tool Pack VBA, and Solver Add-in to add the appropriate tools. Used with permission from Microsoft, an arrow points to the Solver button on the Analysis command group on the Data tab of the ribbon. Figure 11. 41. The Solver add-in is found on the Data tab. Used with permission from Microsoft, built-in data analysis tools. The Data Analysis Tool add-in offers a variety of statistical tools. You likely won't use many of them unless you are doing in-depth statistical analysis. However, there are several that are quite helpful for evaluating most datasets. These tools are some of the more frequently used statistical analysis tools regardless of the industry or application. The functions and tools are listed in the Data Analysis Library in alphabetical order. Detailed explanations of the context, analysis, and use of these statistical analysis tools is outside the scope of this text. Rather than focus on the statistics here, this section will walk through the steps involved in using each tool. Correlation is used to analyze the relationship between two variables. The function in Excel computes the correlation between two or more variables at one time. The output is in the form of a correlation matrix or grid that shows how the variables are connected to each other. The closer the correlation value is to either +1 or -1, the more strongly connected the variables are to each other. A value closer to 0 is a sign that the two values are not strongly connected. A positive correlation indicates that the variables will move in the same direction. This means if one variable is higher, the other variable will also be higher. For instance, when a company's increased sales also increase their overall company profit. A negative correlation value indicates that the data move in opposite directions. For example, if an increase in price decreases the quantity sold. Only numerical data can be analyzed using correlation. If you have categorical data that you are interested in analyzing, you will need to code it using numbers. To use the tool, go to the Data tab and select the Data Analysis tool and then Correlation. Then, select the data of interest and click OK, Figure 11. 42. Be sure to select labels in first row if your dataset contains column headings. It is generally good practice to include these in your analysis as it helps to identify the information and has a more professional look. If there are no headings, the output will list the data by column number. You can also select an area on the page to display the output or have the output on a new tab in the current worksheet or a new worksheet entirely. The output will be static. That means if you change any of the data points in the selection, the correlation will not be updated. You will need to run the correlation tool again to update it based on new or different data. WorldCorp would like to investigate the relationship between the price of their products and the quantity sold. Management thinks that the items with the lower prices sell more. For this example, the selected range is the quantity column and the price column. Be sure to check labels in first row to tell Excel that there are column headings in your selection. Data tab selected. Correlation pane displays input category options. Input range, $1, $44 grouped by, columns, labels in first row checked. Output options selected, new worksheet ply. Spreadsheet columns D and E selected. Figure 11. 42 correlation is used to find the relationship between two variables. Used with permission from Microsoft, using the dataset from WorldCorp's product sales, you can create the correlation matrix in Figure 11. 43 as the output. The default for Excel is to include several decimal points. Often, this level of detail is not necessary, so you may need to clean the output by reducing the number of decimal points and changing the column widths. You might also consider additional formatting such as bolding certain numbers or filling cells with color. According to the output, the correlation between sales and price is not very strong. The value -0. 92 is closer to 0 than it is to 1, which indicates that management's suspicion that more products at the lower price range are sold is not correct. In the spreadsheet, 7 cells are populated with data. A2, quantity A3, unit price B1, quantity C1, unit price B2, 1, B3 -0. 9,249 and C3, 1 figure 11. 43, the output from the correlation function gives you a matrix of correlation values for the selected variables. Used with permission from Microsoft, Descriptive Statistics, the Descriptive Statistics tool provides a summary of the dataset in a table format. The summary information includes items such as the mean, variance, standard deviation, and range. You can select a single column of data or multiple columns at once. You can also analyze data that is grouped in rows rather than columns. Be sure to check the appropriate box when prompted if your data is in rows. As with correlation, you can display the information on the current worksheet, on a new worksheet, or in an entirely new workbook. To access descriptive statistics, go to the Data tab and then Data Analysis. Choose Descriptive Statistics, Figure 1144. When the input window appears, select the data you want to analyze. Be sure to check the box to indicate that the data has a header row. Next, determine the desired location for the output result. Finally, select Summary Statistics at the bottom of the input window and click OK. Data tab selected. Descriptive Statistics pane displays options. Input options. Input range, $1, $44 grouped by columns, labels in first row checked. Output options. New worksheet ply and summary statistics selected. Figure 11.44 The Descriptive Statistics tool is a quick way to summarize a dataset. Used with permission from Microsoft, notice that you also have an option to select confidence levels and both the KTH largest and smallest values in the output. These are more advanced level statistical analyses. If desired, choose those options to be included in the output. The default setting for confidence intervals in Excel is 95%, but you can customize that setting. If you use the dataset for WorldCorp, you obtain the following output when you use the Descriptive Statistics tool, Figure 11.45. Unit price spreadsheet header lists numerical data for mean, standard of error, median, mode, standard deviation, sample variance, kurtosis, skewness, range, minimum, maximum, sum, and count. Figure 11.45. The output from the Descriptive Statistics tools includes values such as the mean and standard deviation. Used with permission from Microsoft. Notice with this output, you will again need to adjust the number of displayed decimal points to give it a more professional look. You can also choose to format the numbers with commas or as currency if applicable. Histograms. A histogram is a chart that displays the number of occurrences of data within a defined range. This is a convenient way to easily see the ranges of most of the data. It is not an in-depth statistical analysis of the data. Instead, it provides a summary of the overall distribution of the data. Histograms can be used with data that is at least at the ordinal level of measurement. The histogram function can be accessed through the Data Analysis library. When selected, as with others in the Analysis library, an input window will appear, Figure 11.46. You will need to input some information such as the input range and the bin range. Histogram pans displays input options for input range, bin range, labels. Output options include output range, new worksheet ply, new workbook, Pareto, sorted histogram, cumulative percentage, chart output. Figure 11.46. The input range and the bin range are needed to construct a histogram of the data. Used with permission from Microsoft. The input range represents the data being divided into the various bins, or category ranges. These bins must be mutually exclusive and collectively exhaustive. In other words, each data point needs to have only one bin into which it fits. This means the bin ranges must be set up to accommodate the maximum and minimum values. Excel will sort the data correctly into the bins. Other options for the histogram tool are to include the cumulative percentage, output a sorted histogram, or have the output be in the form of a chart in addition to sorting the data into each of the bins. Let us look at the WorldCorp sales data again. To construct the histogram, establish the number of bins and the size of the bins you will be using. Be sure to include enough bins to show differences that may exist in the dataset but not so many that it is difficult to see trends or that several bins have no data in them. A general rule of thumb is to divide the range of the data, highest data point, lowest data point, by the width of the categories. For example, if the range is 800 and you want each category or bin to increase by 50, you will need approximately 16 bins. You can also determine the range of each bin by first determining how many bins you want. For your range of 800, if you want 20 bins, each bin will have a range of 40. The column of data you will use for the histogram is column E, unit price. When using the Descriptive Statistics tool, you determine that the minimum number is $7.64 and the maximum number is $14,353. The output also gave the range of the dataset, $14,345, $36. If you divide the range by the number of desired bins, you get the approximate size of the bins you should use. In this example, let's use 15 bins. That would be 14,345. 3615 or 95. 62. You then use this as a basis to establish the bin range that you will use in the histogram tool. You can use whole number categories to make the histogram easier to follow and look cleaner. You could set the first bin at $100 since the value calculated was almost $100, $95, $62. This means that all data up to, but not including $100 will be included in that bin. Each subsequent bin will increase by 100 until you reach 16 bins. You record these bins in the spreadsheet manually. Excel does not create the bins for you. These bins can be either on the dataset worksheet or a separate worksheet. You will use these cells as your bin range when creating the histogram. A histogram pane displays input options selected, input range, raw data. $1, $44 bin range, A$1, A$17 labels, new worksheet ply selected in output. B table displays columns bins frequency. Numerical data populating both columns. Figure 11. 47. You can create a histogram of World Corp data. The bin range defines the category limits for the histogram. A. You can then use the histogram tool to set the criteria. B. The output of the histogram tool displays the frequency in each bin or category. Used with permission from Microsoft. Open the histogram tool in Data Analysis. Select the input range, the unit price column, and then select the bin range. Be sure to select the Labels checkbox if you are including the column header in the input data selection. You must also include a column heading for the bin range if the data range has a column heading. Figure 11. 47a. The output for the histogram data table shows the count in each of the established bins for the input range selected. Figure 11. 47b. Excel will automatically add a more bin at the end to include all data that falls outside of the range that you establish. Even if you have a bin to accommodate the maximum data point, Excel will add the more bin at the end of the histogram data table. From this table of data, you can create the histogram using the options on the Insert tab. Alternatively, you can select the chart output and create the chart at the same time you create the data by checking the chart output option at the bottom of the window. You can also include cumulative percentages in the output by checking the cumulative percentage. Figure 11. 48. Creating a histogram chart from a dataset not using the data analysis tools will be covered in histogram. A histogram is inserted into spreadsheet. Bins labels x-axis, frequency labels y-axis. Percentages are visible along right. At left in spreadsheet, columns labeled bins, frequency and cumulative percent are visible and selected. Figure 11. 48. If selected, the histogram can also be displayed graphically. Used with permission from Microsoft. Regression. Regression is a tool used in inferential statistics. It determines the best fit line or data model for a given dataset. There are many types of regressions, but linear regression is the method most used in business. Linear regression can be used to forecast sales and expenses for the next year, to better understand the drivers of customer purchasing levels, or to investigate how price changes might impact profit. With the regression process, you have one dependent variable you are predicting, y, and one or more independent variables, x. You are using to predict y. With the tool in Excel, you can have as many x variables as you need. Real-world application. Regression in business. Regression is the primary tool used by businesses to determine if a relationship between variables exists, as well as the magnitude and nature of this relationship should it exist. In business, regression can be helpful in optimization and business forecasting across a variety of industries. For instance, you can investigate the increase in new home sales based on economic growth. You can also make determinations about how much inventory to purchase. Regression is one of the data analysis tools. As with the other tools, when you open it, an input window will appear. Figure 11. 49. Select the column to use for the y variable and then select the column S to use for the independent variable S, x. If using more than one independent variable, be sure that all the x variable columns are next to each other. Also note that you must have equal numbers of rows for all variables you select for analysis. Regression pane displays input options for input Y range and input X range. Other options available include labels, confidence level, constant is 0 available. New worksheet ply is selected in output options. Figure 11:49. The input window for the regression tool allows you to select the Y and the X variable S. Used with permission from Microsoft. Be sure to check the labels box if you included the column headings. It is good practice to include the headings, as the output for regression will be more specific to your dataset. Other checkboxes relate to residuals and line fit plots, so check them if they apply to your situation. These options are more advanced statistical tools that can be used. As with the other tools, you can decide where to place the output of the function. The output will be a detailed regression analysis from which you can extract the relevant information, such as R2 and the regression equation, using the coefficients column. Using the same dataset you've been using, you can run a single regression using quantity as the independent variable X to predict the FOB as the dependent variable Y. These values were chosen to investigate the impact that quantity has on FOB. Management believes that although unit price and quantity are not strongly connected, the quantity value is a good predictor of FOB, figure 11:50. To begin, go to the Data tab and choose Data Analysis. Then select Regression from the list. Select the data in column F, FOB, as the Y input range and column D, quantity, as the X input range. Check the labels box if you also included the column headings. Then, click OK. Make sure to clean up the data, such as by reducing the number of decimal places, and format it to give it a professional look, figure 11:51. Regression pane displays input options. Input Y range $1, $44, input X range $1, $44, labels selected. Output options selected, new worksheet ply. Spreadsheet visible in background D column quantity F column FOB dollar, figure 11:50. This example uses quantity as the X variable and FOB as the Y variable. The regression tool shows the ranges for each of the variables. Used with permission from Microsoft. The spreadsheet titled Summary Output provides statistics in various forms, regression statistics, ANOVA, and others. Figure 11:51. The output provides many statistics a business can use for forecasting. Used with permission from Microsoft. If the dataset has more than one independent variable, the information for each variable will be listed in the output as an additional row under the intercept row. Advanced Data Analysis Tools. The Data Analysis Library of Tools has many other statistical analysis tools. These are used in business less frequently than the tools discussed so far, but they do offer some opportunities for more in-depth analysis. You might see these tools used in more scientific disciplines such as chemistry or biology. This section will briefly introduce how to use these functions in Excel. Analysis of variance. Analysis of variance, ANOVA, is a statistical technique used to compare more than two groups at the same time. It involves conducting an analysis to determine if differences are present in the data based on their respective variances. There are 3 types of ANOVA analyses available in Excel that are easily accessed through the Data Analysis tool. The input windows for the ANOVA functions look very similar, so be sure to check the title at the top of the input window. ANOVA single factor focuses on analyzing information for a single variable, figure 11:52. For example, perhaps you want to do some price checking on your favorite brands at 3 retailers. You could use ANOVA to determine if there are price differences between the retailers. ANOVA single factor pane displays input options. Input range grouped by columns selected and rows labels in first row alpha 0. 5. Output options include output range, new worksheet ply selected, new workbook. Figure 11:52. Single factor ANOVA is centered on differences between a single variable. Used with permission from Microsoft. To use the single factor function, simply select the data of interest and choose the appropriate grouping of the data, columns or rows. Be sure to check the labels box if you included the headings in your selection. You also have the option to change the alpha significance level for your analysis. The output will be in the form of a typical ANOVA table, which you may have seen in a statistics course. ANOVA, two-factor with replication, is used to test two variables and to determine if there is any interaction present in the variables. Figure 11. 53. The input window looks like that of the single factor, except you will need to add the number of rows per sample. This number will need to be the same for all categories. You must also have row and column headings for this option. Excel assumes that the first column and the first row in the selection will include the headings for the data, so there is no labels checkbox. ANOVA, two-factor with replication pane input options. Input range, rows per sample, alpha 05. Output options include output range, new worksheet plies selected, new workbook. Figure 11. 53. ANOVA, two-factor with replication requires that all samples have an equal number of rows. Used with permission from Microsoft. The final type of ANOVA in Excel is ANOVA. Two-factor without replication, which allows you to test two variables. Unlike with replication, here you will not be testing for the interaction between the two variables. Instead, you are testing the two variables independent of each other but simultaneously. Notice in Figure 11:54 that the window looks the same as the window for single factor, except for the title. There is no box to fill in the rows per sample as there is in two-factor with replication. ANOVA, two-factor without replication pane input options. Input range, labels alpha 05. Output options include output range, new worksheet plies selected, new workbook. Figure 11:54 two-factor without replication has a single row per sample. Used with permission from Microsoft. Link to learning. Through the use of the advanced statistical tools in Excel, you can better analyze data and discover differences among various groups of consumers in your target market. Watch this video on how ANOVA can be used to understand consumers in the craft beer industry to learn more. F-test. The F-test is used to determine if two datasets are from the same population based on their variances. It is another type of hypothesis test that can be used for in-depth statistical analysis. Select F-test, to sample for variances from the data analysis tool library. As with the other functions, an input window will appear. Figure 11:55. You will need to select the range of each variable separately. The ranges do not need to be the same size. Check the labels box if you included the column headings. Click OK when you are ready to analyze the data. F-test to sample for variances pane input options. Variable 1 range, variable 2 range, labels alpha 05. Output options include output range, new worksheet plies selected, new workbook. Figure 11:55. The F-test function examines the variances between two datasets. Used with permission from Microsoft. T-tests are also hypothesis tests. T-tests are used when data does not follow the normal distribution, a concept in statistics, when the sample sizes are small, generally less than 30, or when you do not have a population standard deviation. It is often used in statistics to test for statistical differences between two groups of data. There are 3 t-tests available in Excel. The input windows look the same, except for the title of the input window, so make sure you have selected the appropriate test. The first type, t-test, paired to sample for means, is for dependent datasets, such as if you are determining the success of a coupon campaign. You could track sales for a group of customers before the coupon, and then track the sales for the same group of customers after the coupon campaign. You can then use this test to determine if there is a statistical difference between the means of the two groups, or you can input a specific level for the difference in the hypothesized mean difference input argument. Figure 11:56. If there is no set difference level you are investigating, then type 0 in the hypothesized mean difference box. T-test, paired to sample for means pane input options. Variable 1 range, variable 2 range, hypothesized mean difference, labels alpha 05. Output options include output range, new worksheet plies selected, new workbook. Figure 11:56. The paired to sample for means test examines before and after comparisons. Used with permission from Microsoft. The two remaining t-tests in Excel are for analysis with independent datasets. The tests are t-test, to-sample assuming equal variances, and t-test, to-sample assuming unequal variances. You could use the to-sample t-test to determine if there is a difference between purchase amounts for males and females. You could also use the test to determine if sales have changed between last year and this year. The difference between the two tests is that one deals with equal variances and the other deals with unequal variances. You will need to determine before selecting the test if the variances are nearly equal or not. You can determine if the variances of two datasets are equal by using the descriptive statistics tool discussed in descriptive statistics. When you choose the appropriate function, an input window will appear, Figure 11.57. As with the paired test, you will need to select the two ranges of data and a hypothesized mean difference. If there is no difference, then type 0 into the hypothesized mean difference box. T-test, to-sample assuming equal variances, pane input options, variable 1 range, variable 2 range, hypothesized mean difference, labels alpha 0. 5. Output options include output range, new worksheet ply, selected, new workbook. Figure 11.57. The to-sample assuming equal variances function examines statistical differences between two datasets when the variances are equal. Used with permission from Microsoft. Using the WorldCorp data file with unit price, you can determine if there is a difference in the unit price between home stereo systems and computer servers accessories. The t-test is appropriate for this analysis because the population standard deviation is not known. In other words, you do not know whether the data follows the normal distribution. Upon verification, you determine that the variances of the two groups are very different, so you should choose the t-test. To-sample assuming unequal variances, Figure 11.58. T2-sample assuming unequal variances, pane input options. Variable 1 range, A$2, A$19, variable 2 range, B$2. B$14 hypothesized mean difference, 0, labels selected, alpha, 05, output options, new worksheet ply, selected, Figure 11.58. If the variances are known to be not equal, use the t-test to-sample assuming unequal variances function. Used with permission from Microsoft. The output from the function gives all the information needed to make the decision for the hypothesis test. As with previous functions, clean up the decimal points and reformat. The output obtained from using the other t-test functions will look like Figure 11.59. Cell A1 displays t-test. To-sample assuming unequal variances. Column A, mean, variance, observations, hypothesized mean difference, DF, etc. Numerical values in columns B, home stereo systems, and C, computer server accessories. Figure 11.59. The output from the t-test function shows the p-value for both a one-tail and two-tail test. Used with permission from Microsoft. Z-test. Z-test to-sample for means, Figure 11.60. Tests for differences between two independent datasets that follow the normal distribution. It is like the t-test except that the data is normal. Z-test, to-sample for means, pane input options. Variable 1 range, variable 2 range, hypothesized mean difference. Hypothesized mean difference options, variable 1 variance known, variable 2 variance known, labels alpha, 05, Figure 11.60. The z-test function is used when data sets are known to be normal. Used with permission from Microsoft. You will need to select the two ranges for analysis and include a hypothesized mean difference if desired. In addition, you will need to enter the variance for each of the variable ranges. If you don't already know the variance, you can use the descriptive statistics tool previously discussed or the variance function in the insert function library to obtain it. The variance you enter must be a number, not a cell reference. Check the labels box if appropriate and then click OK. The output obtained from the z-test will be much like the output for the t-tests. The Solver add-in. The Solver add-in offers additional ways to analyze a dataset. This section will just cover the basics, but you can research the tool further if you want to know more about Solver and its uses for data analysis. Solver appears with Data Analysis on the Data tab, Figure 11.61. An arrow points to the Solver button on the Analysis command group on the Data tab of the ribbon. Figure 11. 61. The Solver add-in is found on the Data tab, used with permission from Microsoft. The Solver tool allows you to change levels in a dataset according to specific constraints you set up. Figure 11. 62. Then, you can see the various solutions under those constraints. This is a helpful tool if you have multiple variables within a dataset. The output provides an optimal solution with the dataset given the constraints you establish. Solver parameters pane displays options. Set objective $38 to max by changing variable cells subject to the constraints. Make unconstrained variables non-negative checked. Select a solving method. GRG nonlinear. Figure 11. 62. The Solver tool allows you to change levels in a dataset according to specific constraints, used with permission from Microsoft. To use the tool, you need to determine the target cell for optimization and the criteria, maximum, minimum, or a specific value. Then, you add the various constraints to the dataset. You can add up to 100 constraints to the Solver tool. Solver will find a solution to meet the criteria for the target cell, assuming there is a solution. You can apply the solution to your dataset by choosing Keep Solver Solution with the output. There are many applications in business for Solver. For example, you could use the tool to determine the optimal level needed to minimize costs or maximize revenues in a business. You can use it to find the optimal solution for allocations in a retirement fund to enable you to retire at your desired age. You can also use it to determine the conditions necessary to pay off a mortgage loan in half the time. Take a look at the data in the SolveSamp tabs of the downloadable Chapter 11 data file, SolveSamp 1-7, for some great examples of Solver and applications of the tool to various problems. Spotlight on ethics, data integrity. There are many ways that information and data can be manipulated to tell a different story from what is factual or to influence your interpretation of the information to slant a certain way. Simple changes such as adjusting the scaling on a chart or adding formatting changes to numbers can alter the way people interpret the information. For instance, you may want to show a larger than actual impact. You might decide to use a baseline number other than 0 along the x-axis to show a much larger trend in the data than what is real. Or, perhaps you can choose to emphasize information and impacts by using very small units of measure. With today's endless access to data, the influence of the media, and the ever-present fake news online, it is important to be diligent about making sure that data is accurately reported, analyzed, and presented to the intended audience. Learning objectives. By the end of this section, you will be able to use Scenario Manager to evaluate different variables. Determine a desired result using Goal Seek. Having a backup plan is helpful when things do not go as expected. The plan offers an alternative course of action to pursue in case the first path does not work out. In business, this practice is called contingency planning, and it is essential for the business to be successful. This planning process can involve investigating alternatives if sales are lower than expected. It can involve planning for the eventual retirement of key personnel in the business. It could also address items such as the long-term strategic direction of the company. The contingency plan is a proactive attempt to anticipate some situations that might be different from your expected course of action, and that might negatively impact the success of your business. Having this plan in place certainly does not guarantee that nothing outside of the plan will happen, but it helps a business to deal with specific situations they have identified as well as some degree of uncertainty. You cannot always plan for the unexpected, such as natural disasters or shifts in consumer preferences, but there are some things that you can plan around. For example, the business can have a plan in place in the event sales are lower than expected. This plan could involve budget cuts or enhanced marketing efforts to boost sales. There is a process to developing a contingency plan for a business. These steps might also be helpful in your personal life as you plan for your future career. The first step is to list the risks or the events that have some uncertainty associated with them. For example, if you are unsure of what the utility costs might be for a new building, that could be a risk for your business. Some areas where a business may experience risks are unplanned issues with time or schedule, cost adjustments, availability of resources, or technical problems. Next, you will need to rank the risks according to the impact to the business. For example, if your business is an e-commerce site, a technical issue that crashes your website would be a significant priority over increased office supply expenses. Next, you need to set a plan for each event that you have identified. Each plan should be detailed enough to provide an alternative course of action for the business. Your business should revisit the contingency plan often and make any adjustments necessary based on any changes in the business. There are many templates online that can help you with contingency planning in business. Some Excel templates use formatting to make the plan easy to understand and professional so that you can easily share it with others in the company. Using Scenario Manager. The Scenario Manager tool in Excel provides a way to look quantitatively at contingency planning. It allows the user to change attributes without altering live data to examine the resulting impact on key variables. You can change up to 32 cells and view the results of those changes all at the same time. This feature can be quite helpful for contingency planning. For example, you might already have metrics that identify the best and worst-case scenarios for sales. Using this range and the Scenario Manager tool, you can look at the impact to the overall profit picture for the business. You could also use the tool for planning your personal finances. You could investigate the impact of increasing your monthly mortgage payment on the time it will take you to pay off the loan. The tool can be instrumental in helping a business navigate multiple courses of action to determine the best approach moving forward. You can also merge the scenarios from a single or multiple worksheets together for more in-depth analysis. What is a scenario? The Scenario Manager is part of the What If Analysis Tools suite in the Forecast command group. The tool is accessed from the Data tab and is in the Forecast command group, Figure 11. 63. Data tab selected. What If Analysis button selected and opens to options, Scenario Manager, Goal Seek, and Data Table. Figure 11. 63. The Scenario Manager tool provides a way to look quantitatively at contingency planning. Used with permission from Microsoft. A scenario determines the values that Excel will use to change the input cells. You can save different scenarios with different values to view the impact on your target cell S at the same time. When you choose Scenario Manager, an input window will appear, Figure 11. 64. From here, you will set the changing cells that define the scenario and the target cell for the results. Scenario Manager pane displays scenarios options. Window reads, No scenarios defined. Choose Add to add scenarios. Add button selected at right. Changing cells and comment windows blank. Figure 11. 64. To use the Scenario Manager, first set the changing cells and target cell. Used with permission from Microsoft. Let's begin with a simple example of obtaining a home mortgage. The initial mortgage is for $150,000 for 30 years with an interest rate of 5%. You want to find a better interest rate and see the impact that rate will have on your payment and the total amount you will pay. Using the PMT payment and FV future value functions from the function library, you can quickly determine the status of the loan, Figure 11. 65. With these values at the current rate of 5%, you will pay just over $800 per month, and at the end of the life of the loan, you will have paid nearly $260,000. The functions by default return a negative number for the results, as indicated by the parentheses and the red font color. You will need to adjust the equation to convert the number to a positive number. You can either put a in front of the function or use the ABS function at the beginning of the formula to use the absolute value of the number. You can use the Scenario Manager to investigate different interest rates and different payment terms if you decide you want to pay the loan over 15 years or a time frame other than the standard 30-year mortgage term. You will use the same mortgage example to investigate different levels for the interest rate and repayment terms. In the spreadsheet, cell E3 is selected and equals FV, A312, D3, C3 is in the formula bar. $256,561. $46 is inside cell E3 in red font. Figure 11. 65. The functions by default return a negative number for the results as indicated by the parentheses and the red font color. Used with permission from Microsoft. Adding and deleting a scenario. Using the mortgage example, you can create a scenario to look at the impact of lowering the interest rate on both the payment and the total amount paid for the loan. First, to add a scenario, go to the Data tab, choose What If Analysis, and select Scenario Manager. Click Add, and the Add Scenario dialog box will appear. Figure 11.66. Here, you will define the changing cells and name the scenario. You can name this scenario Rate Changes. Add Scenario pane displays options. Scenario name, Rate Changes, Changing Cells. E3, Control plus click cells to select non-adjacent changing cells. Reds beneath, comment, created by AM on 3/25/2021, protection prevent changes selected, hide. Figure 11.66. To add a scenario, click Add in the Scenario Manager window and define your scenario in the dialog box. Used with permission from Microsoft. Next, select the cell you want to change. To change the rate, you would select cell A3. The Scenario Manager does allow you to add more than one cell in the scenario. In this example, you will also change the length of time for the loan. Select A3. B3 for changing cells. You can add comments if desired to explain the scenario, such as details about the reason for the selected ranges and other relevant information. Then, click OK. Next, you will define the levels or range of values that Excel will use to change the value in cells A3 and B3. Assume you want to compare the impact of a rate higher than the original 5% and a loan term shorter than the original 360 months to the impact of a lower rate and longer loan term. Figure 11.67. Add two separate scenarios at the various levels for each cell A3 and B3. Click OK. This will take you back to the Scenario Manager window. Add the other scenario in the same way. Row 2 displays headers and Row 3 displays numerical values. Scenario Values pane reads across top. Enter values for each of the changing cells. Options: 1. A$3 $0, $55, and 2. B$3 180. Figure 11.67. Define the ranges of values for Excel to manipulate in the scenario. Used with permission from Microsoft. Notice that you have two scenarios listed in the Scenario Manager. Figure 11.68. Scenario Manager pane displays selected options. Scenarios: high rate, low rate. Add, delete, edit, merge summary buttons visible. Changing cells: A$3, B$3, comment. Created by AM on 3/25/2021, modified by AM on 3/25/2021. Figure 11.68. The Scenario Manager lists all the active scenarios on a spreadsheet. Used with permission from Microsoft. There are a couple of options at this point. If you want to see the results from either scenario on the spreadsheet, click the appropriate scenario in the list and click Show. This will change the value in the spreadsheet, but only for one scenario at a time. If you choose Summary, the Scenario Manager will compile the information for all the scenarios in the list in a clear table on a separate worksheet so that you can compare the results. Figure 11.69. You can then format and adjust the table to fit your needs. One other functionality of the Scenario Manager is that it can merge scenarios from other worksheets into a single worksheet using the Merge button. Scenario Summary Spreadsheet Header row includes current values, high rate, low rate columns. Changing cells and result cells sections follow with populated cells. Numbers with indicated in red. Note under table. Figure 11.69. The Scenario Manager tool provides a summary of the results on a separate worksheet. Used with permission from Microsoft. To delete a scenario, go to the Scenario Manager and select the scenario you want to delete from the list and choose Delete. If you have created a scenario summary table, the table will remain even if you delete the scenario. If you instead selected Show and the scenario is displayed on the spreadsheet, the numbers will not revert to the original values even if you delete the scenario. Rather, you will lose your original data. For this reason, it is generally better to use the scenario summary rather than the Show option. Real-world application. Personal budgeting. You've learned that Excel can be a helpful tool for managing your personal finances. It can also be a handy tool to help you plan for future purchases and accumulate savings for retirement. Take a look at this article to see how the Scenario Manager can help with budgeting your personal finances. Let's use the Scenario Manager to save for a vacation. You will need to investigate the cost of the vacation. For instance, factor in all costs associated with the travel, flight, hotel, food, etc. Ideally, you will want to compare more than one cost associated with the vacation. Perhaps you are comparing hotels or flights or even another destination altogether. Then, determine what your sources of income might be. You will use the scenario manager to determine the costs of the vacation by comparing the different vacation options using your budget information. Think about the following. How can the scenario manager tool be used to help you reach your goals? What assumptions did you need to make in order to establish your budget? Editing a scenario. To edit a scenario, open the Scenario Manager, select the scenario you want to edit, and choose Edit on the right of the window. This will open the initial scenario window. You can make changes to the target cells, comments, or name of the scenario. Then, click OK. You will be prompted to adjust the values if desired. Then, click OK. You will need to run the summary again to see the updated results based on the changes you made. Using GoalSeek. GoalSeek is another tool in the What If analysis group. It is like Solver but restricted to a single input variable. The GoalSeek tool allows you to select a target cell and value for that cell by changing another cell that contains a formula. For example, GoalSeek could determine how much money you need to set aside to reach your retirement fund goal. It could also determine the mortgage interest rate needed to keep a monthly payment within your budget. In a small business, this tool can help when considering a purchase of equipment or property for the business. In this case, the duration and the total amount of the loan are typically known. GoalSeek can investigate financing options to get the monthly installment payment within budget. Conversely, GoalSeek can determine how much in total a person or business can afford for a loan based on a set interest rate and length of the loan. To begin, open the spreadsheet with the information needed for your analysis or create a new one. Using the mortgage example, suppose you would like to determine what value of home you can afford. Most mortgages have a term of 30 years, 360 months, and you are planning on a 5% interest rate. You would like a monthly payment not to exceed $850. The GoalSeek tool can determine the loan amount that will keep the mortgage payment within your budget. Go to the Data tab, click on the drop-down arrow next to What If Analysis and choose GoalSeek Figure 1170. Notice the input window has 3 arguments: set cell to value and by changing cell. GoalSeek pane displays options: set cell $3 to value $850 by changing cell C3. Cell A3 selected with 5% rate inside. Cell C3 selected with $250,000. Loan amount inside. Figure 1170. GoalSeek is similar to Solver, but you are restricted to a single input variable. Used with permission from Microsoft. In this example, type $3 in the set cell field, $850 in the to value field, and C3 in the by changing cell field, loan amount. Click OK. Figure 1171. The result will display in the window if Excel found a solution. GoalSeek status pane displays goal seeking with cell D3 found a solution. Target value $850. Current value $850. Cell A3 is selected with 5% rate inside. Cell D3 contains $850. Figure 1171. GoalSeek displays the result if a solution is found in the GoalSeek status window. Used with permission from Microsoft. Your budgeted monthly payment of $850 will allow you to afford a home that is approximately $158,000. The result window also provides the target value $850 and current value $850. For the solution, when you click OK, Excel retains the solution in the spreadsheet. If you want the values to return to their original numbers, click Cancel instead. You can use the tool to examine various options, such as the price you could afford if you increased your monthly payment to $900. This tool provides information for data analysis and contingency planning when you are focused on one input variable, but it is limited in its use for in-depth planning and analysis. Learning objectives. By the end of this section, you will be able to manipulate and create calculated fields in a pivot table, add slicers to a pivot table, use timelines in a pivot table, In business, you will sometimes hear references made to big data. In this context, big data represents the large, growing, diverse datasets used by businesses to analyze their performance and attract more customers. There are three components to big data: the velocity of growth in the amount of data, the massive volume of data collected, and the variety of data that is collected and used in businesses. This data is collected through a process called data mining, which involves using software to make sense of all the data collected by the company and from outside sources. The goal is to analyze and evaluate large quantities of information and discover trends that may be useful to the company. Those trends could show purchasing patterns for a specific demographic group or identify a new competitor that businesses need to combat. The possibilities are as endless as the data that is collected. Through programs such as Excel and sophisticated data analytics software packages, the data can be synthesized to aid in decision-making in the business. The use of data for decision-making is applicable to all types and sizes of businesses and organizations. You learned about pivot tables in advanced Excel formulas, functions, and techniques. Here, you will focus on the advanced features of pivot tables that help with data analysis. The Pivot Table Analyze tab provides several tools that make data analysis a bit easier. Recall that the Pivot Table Analyze tab is available when you have data formatted as a pivot table and you click inside the table figure 11.72. Pivot Table Analyze tab is selected. Command groups available include Pivot Table, Active Field, Group, Data, Actions, Calculations, Tools, and Show. Figure 11.72. The Pivot Table Analyze tab provides several tools that make data analysis streamlined. Used with permission from Microsoft, the Timeline and Slicer tools offer a more visual way to filter the data in the pivot table. The Fields, Items, and Sets menu allows you to include more calculations in your analysis. There are additional options in this menu that can help facilitate data analysis in the pivot table. Insert Timeline. The Insert Timeline feature for a pivot table allows you to quickly filter information based on a date field. You must have a field formatted as a date to use the Insert Timeline tool. Using the first four tabs in the Chapter 11 Data File Workbook, Timeline 1, Timeline 2, Timeline 3, and Timeline 4, you can create a pivot table using the skills learned in advanced Excel formulas, functions, and techniques. The pivot table summarizes the Enrollment English Index Score (N Index Score) for various majors at a university over several years, figure 11.73. You can use this data to see if there have been changes in the score over time. The Insert Timeline feature on the Pivot Table Analyze tab allows you to add a date filter to the table. Pivot Table Analyze tab selected. Filter command group highlighted. Cell B7 selected 62. 64, formula bar reads, 62, 361,111,111,111. Pivot table fields sidebar displays selected options, major 1 and N index source. Figure 11.73. A date filter can be applied to a dataset with the Insert Timeline tool. Used with permission from Microsoft. Click in the pivot table to bring up the Pivot Table Analyze tab. Choose Insert Timeline from the Filter command group. Click the checkbox next to the field title that contains the date. In this example, the field is called Date. Click OK. The timeline scroll bar will appear, figure 11.74. In this case, you only have annual data, so you can change the unit to years instead of quarters, months, or days. Timeline tab selected. Date is selected under Timeline caption in Timeline toolbar. A date timeline scroll bar displays information and offers options for years selected, quarters, months, and days. Figure 11.74. The timeline scroll bar offers a quick way to filter data using time such as years. Used with permission from Microsoft. Currently, the pivot table shows all years available in the dataset. You can deselect those years that you do not want and keep only those that you are interested in examining. Let's select 2017 and 2018, which filters the table using those dates only. You can then use this filtered data for more in-depth analysis and calculations. To remove the timeline, right-click on the timeline scroll bar and choose Remove Timeline. If you had already filtered the data with the timeline, the data in the pivot table will remain filtered to those dates. If you want the table to return to its original form with all of the dates included, be sure to click on the Remove Filter button prior to removing the timeline. Insert Slicer. A slicer is a visual, interactive way to filter data in a pivot table. When a pivot table has slicers available, you can filter the data by clicking on buttons in the slicer as opposed to using the filter options in the column headings of a pivot table. They are particularly useful when there are multiple users of a pivot table who need to view the information that is relevant to their needs. You can add slicers through the Pivot Table Analyze tab in the Filter command group. Let's look again at the dataset of enrollment ACT scores. A pivot table can be created to include the year's major, average high school grade point average, HS GPA, N-index score, and average ACT math. You can insert a slicer to delve deeper into the data. Assume you want to look at the HS GPA for biology and chemistry majors compared with that of accounting and business majors. You can use a slicer to make this process easier. First, click in the pivot table to access the Pivot Table Analyze tab, then choose Insert Slicer. A selection window will appear Figure 11(75). Click the checkbox next to Major 1. Click OK. Insert Slicer's pane options, date, Major 1 selected, count, N-index score, HS GPA, ACT English, ACT Math, ACT Reading, ACT Science, ACT Comp. Quarters and years. Figure 11(75). The Insert Slicer tool allows you to choose which variable to filter, used with permission from Microsoft. The slicer will appear on the spreadsheet with selection buttons for each of the majors in the list. You can resize and format the slicer to meet your needs. You can also choose various slicer styles under the Slicer tab that becomes accessible when you click inside the slicer, Figure 11(76). Slicer tab selected and Slicer Styles command group offers various options for selection, includes various colors and styles. Figure 11(76). The Slicer tab appears when you have inserted a slicer into a pivot table. Used with permission from Microsoft. When you insert the slicer, the default is for all majors to be selected, as indicated by the blue highlighted buttons Figure 11(77). You can click on the Multi-Select option to remove all the majors and start building your table for analysis. For this example, you want to look at the differences in HS GPA for biology, chemistry, accounting, and business administration. You will choose only those majors to be displayed in your pivot table. Figure 11(78). Command group displays Major 1 selected under Slicer caption. Blue colors selected in Slicer Styles command group. Major 1 slicer displays categories in blue. Filter button is highlighted in top corner. Figure 11(77). By inserting a slicer, a user can quickly filter data by simply clicking on the major of interest in this example. Used with permission from Microsoft. Major 1 slicer displays some categories in blue, some in white. Remove filter button is highlighted in top corner. Figure 11(78). To remove a filter, click on the Remove Filter button. Used with permission from Microsoft. Choosing only these majors filters the table for an easier and more direct comparison. Remember, you could simply use the filter option in the column heading, but slicers are a convenient and interactive way to filter data. To remove the filter, click on the Remove Filter button in the top right of the slicer window. To remove the slicer entirely, right-click on the slicer and choose Remove Slicer. Be sure to remove the filters first if you want the data to return to its original form. Simply removing the slicer window will not also remove the filters you set in place. Slicers are also available when you have data in a data table. With the data formatted as a data table, click inside the data table to bring up the Table Design tab. The Insert Slicer option is in the Tools command group. Figure 11(79). The process to insert, format, use, and remove slicers is the same as it is for pivot tables. Table Design tab selected. Insert Slicer button in Tools command group is highlighted. Cell A1 is selected in the spreadsheet and date is in the formula bar. Figure 11(79). Slicers can be used with data tables as well through the Table Design tab. Used with permission from Microsoft. Link to Learning. Pivot table slicers are a great way to set up an interface so that users can better navigate the data file. You can make a dashboard of slicers to make it easier for users to select the data they need to see from the pivot table. Read this article that provides a detailed example of setting up a dashboard with both slicers and timelines to learn more. Calculated field. The calculated field tool allows you to add columns of calculations to your pivot table. The calculated field tool is accessed through the Fields, Items, and Sets menu on the Pivot Table Analyze tab, Figure 11. 80. Pivot Table Analyze tab selected. Fields, Items, and Sets options. Calculated fields highlighted. Calculated item, solve order, list formulas, create set based on row items, create set based on column items, manage sets. Figure 11. 80 calculated fields are added to a pivot table through the Pivot Table Analyze tab, used with permission from Microsoft. These calculated field columns cannot be used with slicers, but they allow you to analyze the data in other ways. Using the dataset of enrollments and ACT scores, assume you want to get the average ACT scores across the various content areas, English, math, etc. You will need to get an average of the 4 ACT scores as a calculated field column. Click inside the pivot table to access the Pivot Table Analyze tab, choose Fields, Items, and Sets, and click on Calculated Field. An input window will appear. Figure 11. 81. Insert Calculated Field pane displays options, name, formula, add and delete buttons, fields, date, insert field button. Other options in field include Major 1, Count, N-Index Score, HSGPA, ENG, Math, Reading. Figure 11. 81. Select the variable for the calculated field in the Insert Calculated Field window. Used with permission from Microsoft. You will need to name the calculated field, use ACT average for this example, and then you can input the formula. Remember that all formulas in Excel need to begin with an equal sign. You can use functions such as average, sum, and if as appropriate for your needs. For this example, you want the average of the English, math, reading, and science fields. To accomplish this, type in the formula input box equals average to begin. Then choose ENG from the fields list and select Insert Field. Then type a comma and insert the next field, Math. At the end of the formula, make sure to close your parentheses and then check for extra spaces in the formula. Then click Add to create the calculated field. Finally, click OK. Figure 11. 82A. You will now see the calculated field column in your pivot table. Figure 11. 82B. A. Insert Calculated Field pane indicates Add button and option for formula equals average, ENG, math, reading, science. Insert field button selected after field Major 1. B. Column H. Sum of ACT AVG added to spreadsheet. Figure 11. 82. Using the A. Calculated Field feature will add B. a new column to the pivot table. Used with permission from Microsoft. The default setting for the column headings in pivot tables is sum of, even though you are calculating an average. When you created the calculated field, you named the field ACT average, but that is not the column heading Excel will use. Excel will automatically add on sum of to the column heading. You can change that by simply clicking on the column heading and deleting the words sum of. Notice the data in the first cell in the ACT average column for each major is much larger than the other numbers in the major. This cell represents the sum of all the averages for the subgroup. For accounting, 131. 49 is the sum of the average ACT numbers for the years 2015 to 2020. Excel automatically adds the subtotal to the first field in the rows list. This number is probably not as valuable as the averages per year under each major. You can delete this value by choosing the field settings for Major 1 and under subtotals, select None. Figure 11. 83. Field Settings pane displays custom name Major 1 and subtotals None selected pivot table visible in background. Figure 11. 83. The default setting is automatic. This adds the subtotal for the first field in rows in the pivot table, used with permission from Microsoft. Adding this calculated field for the accounting majors, you can see that the average ACT was at its lowest in 2019 and at its highest in 2018. Calculated fields can be used with sales and expense information to determine your profit, profit margin, and other similar calculations. There are other options in the Insert Calculated Field input window that may also be useful. You can select the calculated field from the list and modify it to make changes. You can also select that calculated field and delete it entirely. Click OK after making your changes or deleting the calculated field. If you delete the field, the column will be removed from the pivot table. List formulas. If there are multiple users of a data file, it can be important to ensure everyone is aware of the calculations behind the columns. This will assist the users in understanding the dataset and the information contained within. The List Formulas option in the Fields, Items, and Sets menu creates a separate tab that lists all the formulas, calculated fields, used in a pivot table figure 11. 84. This option is accessed when you are in the pivot table in the Pivot Table Analyze tab. Then, go to Field, Items, and Sets to get to List Formulas. It is good practice to include this with all data files that have multiple calculated fields. The list is not dynamic. If you create additional fields after the list is created, you will need to delete the original list and create a new one. A spreadsheet displays calculated field, and formula columns, and calculated item, and formula columns headers. A note displays at the bottom. Figure 11. 84. If there are multiple users for a spreadsheet, use the List Formulas tool to make sure all users are aware of the calculated fields and solve order in a pivot table. Used with permission from Microsoft. Real-world application. Tracking spending. Pivot tables can be a powerful tool to manage finances in a business or for your personal retirement planning. They allow you to compare data, as well as identify trends and patterns in the data. They are especially useful when you have a large amount of data. Pivot tables can summarize this data, as well as provide interactive capabilities that allow you to adjust the different variables and investigate their influence. For instance, perhaps you would like to investigate spending and determine different considerations, such as how much is being spent, by whom, and on what. The same scenario can be applied to your own personal budget. Consider how you can use a pivot table to track your own spending. How might this process be adjusted for a small business? What are some other uses of pivot tables in small businesses that you can think of? Learning objectives. By the end of this section, you will be able to determine the most appropriate chart for a given dataset or analysis. Create a chart template. Use the Quick Analysis tool to add sparklines to a table. At some point in your career, you might need to present an analysis of data to an audience of peers or management. Your information must appear clear and professional, and will likely include graphs and charts of your analysis. Recall that the theme and color choices of these elements can be critical to developing a professional presentation that will effectively and clearly communicate your intended message. See Preparing Presentations for a review of design strategies and tips. You learned how to create graphs and charts in pivot tables. Some of those skills, such as using legends, adding grid lines, editing axis titles and labels, and including chart titles, will make for a professional presentation of the data. This section will discuss several types of charts and graphs, and when they might be appropriate to use based on your dataset. With data visuals, it is key that you select the type of chart or graph that works best for a particular dataset and makes the information easy to understand. You cannot simply select a graph or a chart based on its appearance. All types of graphs and charts are not appropriate for every dataset. As you decide which chart or graph to use, consider the type and level of data that you have. Table 11. 3. You should also consider what kind of message you are trying to convey. Are you trying to inform, compare, show trends over time, or reveal relationships? Your purpose can dictate what type of chart you will use. Purpose-appropriate charts. Graphs. Comparisons. Bar chart, pie chart, stacked bar chart, clustered column chart. Changes. Line graph, area chart, timeline. Relationships. Scatter plot, histogram, combo column line chart. Table 11. 3. Usage of graphs and charts. Link to learning. Selecting the right type of chart to represent your data is not always easy. How you present your data is incredibly important. You need to always be mindful that you are accurately presenting your data visually in a way that tells the story objectively, with no apparent bias or intention. Visit this link to read strategies for choosing the correct chart to visualize your data. Clustered column chart. A clustered column chart is simply a column chart that includes multiple variables to show the comparison between the groups. A column chart compares one variable against another variable. For example, you might put the sales region on the horizontal axis and the total sales on the vertical axis. A clustered column would have that, but it would include the same data for multiple years of data. The clustered column chart is great for showing comparisons, figure 11.85. Using the World Corp data, you can create a clustered column chart to see the comparisons between the quantity sold for each product type over time. A drawback of the clustered column chart is that it is not appropriate for large amounts of data. If you have more than 5 sets of data, the chart can look too busy and overwhelm your audience. The clustered column chart also works better with a 2D display rather than a 3D display. The 3D display can look too busy and can make it difficult to interpret the information easily. Clustered chart displays February, March on x-axis, hash of units on y-axis, 0 to 800 increments of 200. Blue bars indicate computer servers and accessories, and red bars indicate home stereo systems. Figure 11.85. A clustered column chart can show data for multiple products at the same time. Combination chart. A combination chart combines two different chart types in one visual, allowing you to display data at different levels on the same chart. You can use combination charts to understand and examine comparisons between groups and the relationship between different variables. With this example, a combination chart can be created to show the FOB for each month based on the quantity sold for each of the two product types. With the combination chart, you determine which chart is appropriate for each data series you are including. Figure 11.86 uses a column chart for quantity sold and a line graph for FOB. Combination charts are often easier to interpret as 2D than as 3D. Consider using contrasting colors to make the plotted series more visible. Combination chart displays bar chart with line chart in front. Figure 11.86. Combination charts can be used to show different types of data on the same chart. Stacked column chart. The stacked column chart compares data like the clustered column chart, but displays it in a different format. It shows the relationship between groups using the same scales. Instead of the columns being next to each other, the data is stacked, one series on top of the other, in a single column. A stacked column chart can be used to show part-to-whole relationships. Using contrasting colors will help make the distinction between the groups more visible. Using one of the 3D options for displaying a stacked column chart can give it a professional appearance that is easy to interpret. Figure 11.87. This stacked column chart shows World Corp sales agents' FOB during a 3-week period. A stacked column chart displays weeks 1, 2, 3 along x-axis and displays colored blocks stacked with figures inside for agents in columns. Larger numbers represented by taller blocks. Figure 11.87. A stacked column chart is a different way to display multiple series of data. Bar chart. A bar chart is a horizontal column chart. It is sometimes used to communicate complex data sets and can be easier to interpret in certain situations. Bar charts are effective for displaying negative and positive numbers together. They also work well for charts with long text labels along the y-axis because the labels are more readable when placed horizontally. Figure 11.88. You can create clustered and stacked bar charts to display multiple series in a single chart. Use a simple layout and contrasting colors for the most professional look. Like a clustered column chart, bar charts work best with smaller datasets. Too many bars on the chart can make it unreadable. Use a bar chart when you have 10 or fewer categories to display. You can use World Corp data to construct a bar chart of the volume sold for 4 different sizes of televisions. Bar chart is inserted into a spreadsheet reflecting the data from the spreadsheet. Figure 11.88. Bar charts can be good for displaying complex sets of data. Used with permission from Microsoft. Line chart. A line chart is used to show changes over time. It is appropriate for trend analysis and graphing continuous datasets. Line charts are not appropriate for categorical data. Be careful of the scaling of the axis so as to not overemphasize or de-emphasize the trend in either the vertical or horizontal directions. Keep the chart to 4 lines or fewer for the most effective presentation of the material, and use thicker, solid lines rather than thin lines or dotted dashed lines. Be sure to include a legend if you are plotting more than one series of data. Figure 11.89. Also consider including data markers on the lines to make interpretation clearer. The 3D line chart is difficult to interpret even with a single line. The 2D line chart presents data more clearly. You can examine the changes in sales for home stereo systems at WorldCorp for the month of March with a line chart. Adding grid lines or data labels can help your audience quickly see values at certain points in time. Line chart, March 2021 home stereo system sales, displays dates on x-axis and monetary amounts from $0 to $50,000, on y-axis in increments of $5,000. A line increases and decreases in cycles, figure 11. 89. A line chart can be used to show changes over time. Real-world application. Misleading graphs. Earlier, you learned the importance of accurately representing data in a chart to prevent misinterpretation of the information. When you are presenting charts and graphs as opposed to the actual data, special care should be taken to make sure the data representation is valid. By adjusting the scaling on either axis, you can drastically change the interpretation of the information presented in a chart. Take a look at this article on how mistakes have been made in representing data to learn more. Now select one chart represented in the preceding link and recreate the chart so that it is not misleading, and then answer the following questions. What was the major issue with the selected chart? What are some of the incorrect conclusions drawn from the chart? What adjustments did you make? How does it more accurately reflect the information? Scatter chart. A scatter chart or scatter plot shows the relationship between two variables. It is often used as part of a regression analysis, and it easily shows the direction of the slope of the line, figure 11. 90. A positive slope indicates a positive correlation between the variables, and a negative slope indicates a negative correlation. A positive slope is when the two variables move in the same direction. The chart of data will have a line that moves from the lower left to the upper right corner. A negative slope means the variables move in opposite directions. The chart of a negative slope will start in the upper left corner and move down toward the lower right corner of the chart. If the chart is relatively flat, meaning a near zero slope, then there is little relationship between the two variables. The scatter plot for FOB versus quantity sold show a slight positive upward trend in the data. Scatter chart FOB dollar versus QTY sold displays number of units on x-axis and monetary amounts on y-axis. Dots are scattered throughout the graph in various locations representing the data. Figure 11. 90. A scatter chart is used in regression analysis. A scatter chart can show if a relationship exists. It does not provide a quantitative measure of the relationship between the two variables. It simply shows the estimated relationship. In a scatter plot, the data points are not connected. Instead, it uses the data points only, and then, if desired, you can add in a best fit regression line to examine the information more closely, figure 11. 91. If the data points are clustered around the best fit regression line, the relationship is strong. If the data points are scattered and show little to no discernible pattern around the fitted regression line, the relationship is weak. When you add the trend line to the previous scatter plot, you can see that the data points are not clustered around that trend line. Instead, they are quite spread out. This is a visual indication that the variables FOB and quantity sold are not strongly connected to each other. Scatter chart FOB dollar versus QTY sold displays number of units on x-axis and monetary amounts on y-axis. Dots are scattered throughout the graph in various locations representing the data. Trend line added. Figure 11. 91. Adding a trend line gives a visual representation of the strength of the relationship between two variables. Histogram. A histogram represents a single variable at various levels ranges for that variable. With a histogram, a dataset is condensed into categories for a quick analysis of the distribution of the data. Figure 11. 92. It is the visual representation of a histogram table. Histograms can represent discrete or continuous data, such as the distribution of customers. They are used frequently for a quick assessment of a dataset and to visually convey large datasets in an easy-to-understand format. They readily show outliers or gaps in information. The process of creating histograms was covered in more detail in Histograms. Histogram WorldCorp Computer Accessories Sales First Quarter, units sold with numbers on x-axis and frequency with numbers on y-axis. Bars on the graph with different heights represent the information. Figure 11.92. A histogram is a visual representation of a histogram table. Stock chart. Stock charts are used to represent market data to show the highs and lows for stocks. They can also be used in quality control to show the range of data on a certain day or shift for a production process. To create a stock chart, you will need a date or time reference and the high values and low values for that date or time. The horizontal axis will be the span of time and the vertical axis will be dollars in the case of a stock market chart. It could be another measure if you are using the stock chart for quality control purposes. Figure 11.93. Stock chart displays high-low close with dates on x-axis, numbers from 29,000 to 38,000 on y-axis. Short and long vertical lines populate graph in various locations representing information. Figure 11.93. A stock chart shows the changes in stock prices over time. Chart template. If you are creating the same type of chart on a regular basis, creating a chart template will save time. You can save features, themes, colors, and formats as a template that you can use with other data files. To begin, create the chart as you would normally create it. Add the desired customization to the chart. This could include formatting the chart with company colors or including the company logo as a watermark in the chart. When you are finished, right-click on the chart you just created and formatted. Figure 11.94. Choose Save as Template. You will then be prompted to enter a name for the chart template you just created. Figure 11.95. Consider a name for the template that will help identify the template's use. Make sure the type is listed as Chart Template Files. Input a name and click Save. Save as Template is selected from a menu. A clustered column chart representing information highlighted from the spreadsheet in the background is visible. Figure 11.94. If you use a chart format and design on a regular basis, it might be easier to save it as a template for future use. Used with permission from Microsoft. Save Chart Template pane displays options for file name, Chart 1 and Save as Type, Chart Template Files. Figure 11.95. Remember to give it a file name and that the Save as File type is a chart template file. Used with permission from Microsoft. To access the saved template, go to the Insert tab and choose Recommended Charts. Figure 11.96. Then select All Charts and Templates. The saved template should be listed and you can select that template to apply to the new dataset. Click on the template, then click OK, and Excel creates the chart based on your new dataset. Insert Chart pane selects Templates from left menu. All Charts is highlighted and My Templates displays a colorful chart. Figure 11.96. Chart templates are found under All Charts, then choose Templates. Used with permission from Microsoft. Quick Analysis Tool. The Quick Analysis tool provides a shortcut to analyzing a dataset with a group of options located in one place for ease of use. You can use these options to add formatting, to automatically insert totals and subtotals, or to add sparklines to your data table. There are 3 ways to access the Quick Analysis tool. If you highlight the data table you are interested in analyzing, the Quick Analysis tool icon will appear in the lower right of the selection. Figure 11.97. You can also use Ctrl+Q or right-click on a cell inside the dataset and select Quick Analysis from the menu that appears. A spreadsheet of information is selected, and an arrow points to a small square icon located at the bottom right of the data with a lightning bolt inside. Figure 11.97. The Quick Analysis tool can be used to add sparklines to the data table. Used with permission from Microsoft. When you access the tool, a menu of options appears. Figure 11.98. Choose the appropriate tab and click on the option you want to use. Formatting tab is selected. Options listed: data bars, color scale, icon set, greater than, top 10%, and clear format. Bottom reads: conditional formatting uses rules to highlight interesting data. Figure 11.98. There are various formatting options in the Quick Analysis tool. Used with permission from Microsoft. Formatting. The formatting options in the Quick Analysis tool will insert conditional formatting based on the criteria you select. You can also access these options through the Home tab in the Styles command group. Select the drop-down menu next to the Conditional Formatting button. Conditional formatting provided more detail on using conditional formatting for data. For formatting graphs and charts, there are a few options to choose from under the conditional formatting menu, and you can stack the formatting options upon each other. For example, you can choose to have both the data bars and icon set displayed in your table at the same time. You can add data bars into the selected cells, and they will appear on top of the values and will be appropriately sized for the data in that cell, figure 11. 99. You can format the bars through the conditional formatting menu on the Home tab. To remove the data bars, click on Clear Format on the far right of the Format tab in the Quick Analysis tools. You can also clear the formats by choosing the Clear Rules option in the Conditional Format menu on the Home tab. In the spreadsheet of data, column E is labeled $FOB and lists monetary values. Horizontal bars are shown in various lengths in the column over the data. Figure 11. 99 data bars provide a visual representation of the magnitude of the data in a cell in relation to the other cells. Used with permission from Microsoft. The color scale option adds colors to the cells based on the values relative to each other. There are several different color scales you can choose. For example, one color scale uses blues to represent the higher values and reds to represent the lower values in the dataset, figure 11. 100. Again, to remove the colors, click on Clear Formats in the Quick Analysis tools or Clear Rules under Conditional Formatting. In the spreadsheet of data, column D is labeled Quantity and lists numeric data. Various colors highlight the data. Figure 11. 100 color scales are colors added to the cells based on the values relative to each other. Used with permission from Microsoft. Icon sets are a more visual way to see differences between the values in a dataset, figure 11. 101. The default icon is an arrow that is either red, yellow, or green based on the value in the cell. The icon can be changed by accessing the Conditional Formatting menu on the Home tab. Column D in Spreadsheet is labeled Quantity and lists numeric data. Icons of red arrows pointing down and blue arrows pointing up are visible on left sides of data in cells. Figure 11. 101. Adding an icon set is yet another way to visually examine the differences within a dataset. Used with permission from Microsoft. The greater than option in the Quick Analysis tools will highlight data that is greater than the value you set, figure 11. 102. You set this value in the input window, choose the color scheme for the highlighted cells that meet the criteria, and then click OK. Using the default color scheme, the cells that are greater than the value you set will be highlighted with a light red fill and a dark red text. Greater than pane displays option for format cells that are greater than 15 with light red fill with dark red text. OK selected and cancel buttons are located at the bottom right. Figure 11. 102. Using greater than data that is outside the criteria you select is highlighted. Used with permission from Microsoft. The final option in the Formatting tab of the Quick Analysis tools is the Top 10% tool. This tool highlights the values that are in the top 10% in the dataset. The default is to highlight those with light red fill and dark red text. This can be changed as desired, figure 11. 103. In the spreadsheet of data, cells D7 and E6 are highlighted light red with dark red text. Figure 11. 103. The Top 10% tool is helpful to quickly see the top values in a dataset. Used with permission from Microsoft. Chart. The Quick Analysis tools give you the option to quickly insert a chart of the data, figure 11. 104. Using the Charts tab. The chart will be inserted directly on the worksheet using the default color schemes. After you have created the chart, you can choose to customize it to meet your needs using the skills you have already learned. You can access charts not listed specifically by clicking on More Charts. Charts tab selected. Options include line selected, clustered column, stacked area, stacked column, scatter, and more charts. Recommended charts help you visualize data, reads across the bottom. Figure 11. 104. The Quick Analysis tool allows you to easily access several charting options. Used with permission from Microsoft. Totals. The Totals tab in the Quick Analysis tool gives you several options for summarizing your dataset. You can access the same options through the Formulas tab, but the process is much simpler through the Quick Analysis tool, figure 11. 105a. You can include the total of data, sum, average, count, percent of total, and running total. These options are available for both columns and rows. To access the additional formulas, click on the small arrow to the right of the window. With any of the options, the result of the formula will be included in your data table as another row or column. Figure 11, 105b. A. Totals tab selected. Options: sum selected, average, count, percent total, running, sum, small arrow is highlighted. B. Cells D11 7304 and E11 $199,626 in spreadsheet are indicated. Figure 11, 105. The Quick Analysis Tool tab gives several ways to summarize the dataset. A. The Totals tab has many options. More tools are available if you click on the arrow. B. Adding the sum of a column inserts a new row with the total, used with permission from Microsoft. Sparklines. One way to show trends in your data is to use a sparkline, a small chart inserted into a cell next to your data that shows changes over time. There are 3 options in the Sparklines tab: line, column, and win-loss. Figure 11, 106. These can also be accessed through the Insert menu in the Sparklines command group. Sparklines tab selected. Options: line selected, column, and win-loss. Across the bottom reads, Sparklines are mini charts placed in single cells. Figure 11, 106. Sparklines are another option to add visual interest to your data table. Used with permission from Microsoft. By default, sparklines are inserted at the end of each row. Once the sparkline is inserted, you have access to the Sparkline Formatting tab. Here, you can format the sparkline style, change the input data, or change the type of sparkline. You can also add markers to the sparkline to show the highest and lowest points. In Figure 11, 107, the line sparkline was inserted. With just a quick glance, you can see that Antonio had the most sales in week 2 but did not do as well in week 3, whereas Isabel and James improved consistently. Sparkline tab selected. Line is selected in Type command group and line colors are visible in Styles command group. Column E in Spreadsheet displays various colored lines. Figure 11, 107. There are several design options for sparklines, used with permission from Microsoft. Link to learning. Aramco charts are a way to visually examine market share. They are used often in consulting and finance companies. You can also include different segments within an industry. Read this article to find out more about this special type of chart and how to create it in Excel.